So we will start discussing with what is GDP. So gross domestic product is the total monetary or market value of all the finished goods and services produced within a country's borders in a specific time period, usually which is usually 1 year. So it functions as a comprehensive scorecard of the country's economic health by estimating the size of an economy and growth rate. In other words, we can say that GDP is a number that expresses the worth of the output of a country in local currency. Though it has limitations, GDP is a key tool to guide policymakers, investors, and businesses in strategic decision making. So, as I mentioned, that it has some limitations, which is mainly the exclusion of non-market transactions, which is not counted while calculating the GDP, and the failure to account for or represent the degree of income inequality in society. However, the economists like to use GDP as a measure of output or even as a measure of a country's well-being. So let's have a look into the figures of GDP. That the world's GDP has reached $87 trillion by end of 2019, and if we when we compare this with the figures of 2018, it was almost 84 trillion. So which is showing a growth rate of almost 3.6%. So and USA ranked number one with GDP $21.4 trillion. USA, European Union, China, Japan, and India together represent 72% of the world's GDP. KSA is ranked number 18 with GDP of $779.289 billion. UAE is ranked number 30 with a GDP of $405.771 billion. Qatar is ranked number 52 with a GDP of $191.849 billion, and Kuwait is ranked number 57 with a GDP of $137.591 billion. So together, all these GCC countries represents almost 2% of the world's total GDP, which is almost 1.74 trillion US dollar. Let's look into the next slide, that which is showing the growth outlook of GDP in 2018, 19 years, and 2020 forecast as well. So let's have a look into the 2018 figures. If you can, as you can see in the chart, like the Bahrain GDP, that it shows a growth of 1.8, and Kuwait 1.2, Oman 1.8, Qatar 1.5, Saudi Arabia 2.4, UAE 1.7. And you can see 2019 figures here as well. Bahrain 2%, Kuwait 0.6, Oman 0%. So Qatar it was 2%, and Saudi Arabia 0.2, UAE 1.6. Before discussing the 2020 figures, as you all are know that the 2020 forecasted growth was predicted prior to the corona, and it will affect the global economy. And so there will be a change in the forecasted growth of 2020, but it is still early to comment on the impact. But as per the recent report, which is published in April, the IMF is forecasting a 6.1% fall in advanced economy GDP in 2020. But there is intense focus on the question of how and when to reopen the economies which is currently in lockdown. Then only they can properly assess the impact of corona, and they can do a reforecasting on the GDP of 2020. So let's move on to the next slide, that which is discussing about the MENA region, the Middle East and North Africa region. As we are aware that the Middle East and North Africa countries, which includes Morocco, Algeria, Tunisia, Libya, Egypt, Israel, Palestine, Lebanon, Jordan, Saudi Arabia, Iraq, Kuwait, Bahrain, Qatar, UAE, Iran, and Oman. So these are the Middle East and North Africa region countries. So let's move on to the next slide, which in detail will explain you that what are the GCC regions. So the GCC region established in Riyadh, May 1981, so which is an intergovernmental political and economic union consisting of all Arab states except Iraq, and which includes Bahrain, Kuwait, Oman, Qatar, Saudi Arabia, and the United Arab Emirates. So over the last 20 years, the region population has grown by 30%. This reached 54 million by the end of 2019. And the KSA population, 33.5 million, and UAE 9.7 million. So over the same period, GCC countries have been undertaking variety of measures to ensure long-term sustainable growth by investing in infrastructure, power, renewable transport, and desalination, etc. And we can have a look onto the GCC region reinsurance market and reinsurers. So, driven by strong economic conditions and prospects, the GCC region continues to be an attractive reinsurance growth market with limited exposure to NatCat perils. The GCC countries have traditionally been exposed to lower level of weather-related claims. So, the recent claim that affected, which is a cyclone Mekunu struck in Oman in 2018 May. So other than that, some flood claims but if we can consider other markets globally, that GCC is the one that which is not that much exposed to the NatCat perils. So GCC insurance market has always experienced a double-digit growth rate. The industry is projected to expand at compound annual growth rate of 4.3% from US dollar 29.2 billion in 2019 to US dollar 36.1 billion in 2024. So, which is a prediction that, as we discussed in the GDP slide of forecast of 2020, so it was forecasted prior to the corona. So the figures can change because it is still early to predict the figures of or what will be the impact of corona in the market. So it can change. The retention level in the region remains low compared with other markets. On average, domestic reinsurers cedes 37% of their premium income to reinsurers, with more than 90% of the original premiums are ceded to reinsurers in certain commercial lines. To have a look into it, we will be, while moving through the presentations, we will have a detailed look into this retentions and other figures. So, however, just to tell you that on the general lines, the average retention ratio of general lines business in KSA, which is excluding motor and health, is around 32% in 2018. And when we compare it with 2017, it was almost steady that it was 32% in 2017 as well. But in 16, it was 33% in general lines, and 19 data is not yet available to compare with 2018. So until 2017, 2018, construction showed strong rebound after the financial crisis, and the subsequent economic downturn as well as continued construction progress in Saudi Arabia. So this is all we know, that the construction that, and definitely it will also have an impact due to the corona situation. But as we discussed, it is still early to decide that what will be the impact of corona. So let's move on to the next slide, that which will give you more detailed look onto the Saudi Arabian market, which is one of the biggest economy in MENA region, that which is the biggest economy, as we said, as we discussed in the GDP slide, that the Saudi Arabian GDP is almost 779.289 billion US dollar, and the insurance market size in 2019 is Saudi Riyal 36 billion approximately, from which has grown from 16 billion in 2010. 33 insurance and reinsurance companies are operating in the market, and one professional reinsurance company, which is Saudi Re, and 181 insurance service providers, which is mainly retail reinsurance brokers, loss adjusters and surveyors, and etc. And medical and motor insurance cover continue to dominate the market. This also will be discussed in the coming slides in details, but just to say that almost 83.7% of total gross written premium in 2018 is generated from these two lines of business. So, and the market is regulated and supervised by SAMA. So let's move on to the next slide, that which will give you a more detailed look into the market figures of KSA. So as you can see, that the gross written premiums of KSA market reaches Saudi Riyal 35 billion in 2018. So as I told you earlier, that the 2019 data is still not available. So we'll be comparing the data based on the available 2018 reports. So health insurance gross written premium increased by 4.5% in 2018, reaching Saudi Riyal 19.8 billion, up from Saudi Riyal 19 billion in 2017. Motor insurance premium decreased from Saudi Riyal 11.1 billion in 2017 to 9.4 billion in 2018. General lines premium decreased by 14.1% compared to 2017, reached 14 billion from 16.3 billion. Protection and savings insurance gross written premium, which represents 3.1% of the insurance market, decreased by 3.3% to reach 1.1 billion in 2018, compared to a growth rate of 8.4% in 2017. The total number of insurance policies written is increased to 6.037 million in 2018, which is increased from 5.66 billion in 2017. So these are the general market figures, and let's have a look of the detailed written premiums of each line of business. So as you can see on the table that you can see each line of business, that the aviation line, the written premium was 139.7 million in 2016, which is 0.4% of the gross written premium in 2016. This decreased to 134.9 million in 2017, which was again 0.4% of the gross written premium of 2017, and again increased to 148 million in 2018, which is 0.4%. And if you compare the 2017 and 2018 data, you can see a 9.71% growth in aviation line gross written premium. So if you look at the next line, which is energy, that the premium 2016 was 457.80, which is 1.2% of the 2016 gross written premium. And in 2017, you can see that 739 million, which is 2% of the 2017 total gross written premium in the KSA market. So in 18, it reaches 511.5 million, which is 1.5% of the gross written premium, and it shows a decrease of 30.78% in the gross written premium compared to 2017. So the engineering line of business, you can see that 908.4 million was the written premium in 2016, which represents almost 2.5% of the gross written premium, which increased to 932.4% in 2017, which is equal to 2.6% of the gross written premium in 17, and 701.7 million in 2018, which is 2% of the gross written premium, and it shows a negative growth of 24.74% compared to 2017 gross written premium. And marine 634.1%, which is 1.7% of the gross written premium in 2016, 621.8% in 2017, which is 1.7% of the gross written premiums in 2017, and 544.6%, which is 1.6% of the gross written premium in 2018. And it also shows a negative growth of 12.42%. Next, the property and fire, which is almost 1.8 to 5.8 billion, which is 5% of the gross written premium in 2016, and 1.7 billion in 2017, which was 4.7% of the gross written premium, and which reduces to 1.69 billion, which is 4.8% again of the written premium in 2018. And as you can see that there is a negative growth as well of 0.62%. So accidental and liability line of another line of businesses, which is almost 1.04 billion in 2016, 2.8% of the gross written premium in 2016, and 1.05 billion in 17, which is 2.9% of the gross written premium, and 1 billion in 2018, which is as well 2.9% of gross written premium, which is also showing a negative growth of 5.02%. Protection and savings as well, 1.05 billion in 16, which is 2.9% of the gross written premium. So 1.14 in 17, which is 3.1% of gross written premium. 1.1 billion in 18, which is 3.1% of the gross written premium. That is also showing a negative growth of minus 3.3%. Next is the motor, which is, and as we discussed, that motor and health is the one generating the maximum premium to the gross written premiums of KSA market. And in 2016, as you can see, that it is 12.15 billion, so which is 33% of the gross written premium in the market in 16, and in 17 it's 11.13 billion, which is 30.5% of the gross written premium, and that is reduced to 9.4 billion in 18, which is 26.9% of the written premium in the market. So which is also showing a negative growth of 15.38%. And health, which is also another major contributor to the gross written premium, that you can see that it's 18.6 billion in 2016, which is 50.5% of the gross written premium, and 19.035 billion in 2017, which is 52.1% of the gross written premium, and it is 19.8 billion, which is 56.8%, and that is showing a growth of 4.45% when compared to the premium of 2017. So if you look at the overall gross written premiums year-wise, like year-wise in 2016, 17, and 18, you can see that the 16 gross written premium of KSA market was around 36.85 billion, and in 17 it was 36.5 billion, and in 18 it was 35 billion, that which is overall showing a negative growth of like minus 4.08% when compared to the 2017 figures. So this slide will give you an detail like claims paid like on a gross basis, that how much claims paid on line basis. So you can see that as you can see in the chart that as health is the major contributor and motor and health is the major contributor to the gross written premium in the market. You can see the biggest number of claims paid in the line of business is as well health, that it is 14.547 billion in 2016, which is almost 56% loss ratio, and you can see that in 17 it is 15.47 billion, which is almost 58.3% of the loss ratio, and it increased to 17.6 billion in 2018, which is 64% almost the loss ratio. And motor line of business, as you can see, it was 9.05 billion gross claims paid in 2016, which is 35% loss ratio, and in 17 it is 8.3, and in 18 it is 6.9 billion, which represents 31.3% and 25.4% loss ratio as well. So the protection and savings line, you can see that it is 420 in 2016 million and 498.5 million in 2017, and 629.3 million in 2018, which represents as well 2% in 2016 and 1.9% in 2017 and 2.3% loss ratio in 2018. So you can see the figures of other general lines, which is excluding the motor, that the gross claims paid in 2016 is 2.04 billion, which is 42% loss ratio, and it is 2.2 billion in 2017, which is as well around 39.8% loss ratio, and in 2018 it reaches 2.04 billion, and that is also around 33% loss ratio. So on the next slide, let's move on to the next slide, that this will give you a more detailed look into the gross claims paid by line of business in 2018. Total gross claims paid in 2018 increases to 27.2 billion from 26.5 billion in 2017, which represents an increase of 2.6%. Health gross claims paid grew by 13.9%. However, the motor gross claims paid decreased by 16.7% compared to 2017. So the energy claims paid increased from Saudi Riyal 18.6 million in 2017 to Saudi Riyal 356.8 million in 2018, which is mainly due to the fire claim in National Petrochemical Refinery at Yambu. So that is the reason for a huge jump on the energy claims. So, and you can see the table below that it shows the percentage of growth on each line of business on claims compared to the previous year, that the health sector claims grew by almost 13.9%, and the motor sector, as you can see that there is a decrease in the claims compared to the previous year, that is minus 16.7%. Property as well, there is a decrease of 35%, engineering 38.9%. Protection and savings, you can see that there is a a change of around 26.2% in gross claims paid compared to 2017 years. Accident and liability and other lines, which is decreased by 15.3%. Marine increased by 7.7%. Energy, as we discussed, that it is increased by 1,820%. And the aviation is 585.9% increase in the gross claims paid compared to the 2017 data with 2018. Let's have a detailed look into the property figures. So property fire figures that the return premium represents 4.8% of the total market gross return premium, which is 1.6 billion in 2018. Property fire insurance net and premium registered almost Saudi Riyal 330.3 million. As you can see in the chart on the right hand side, that you can see the gross return premiums, which is almost 1,697.9 million, and the net end premium is 330.3, and the net return premium amounted to 314 million. Property and fire insurance contributed to 1.1% of the total market net return premium in 2018. And as you can see, the net claims incurred as well, it's 118.5 million, which almost represents 35.7% of loss ratio on a net basis. So you can see a gross loss ratio comparison of property and fire line of business. So you can see that as we discussed in 2018, the gross return premium is 1.6 billion and the claims incurred is 624 million on gross basis, so which is representing almost 36.77% is the loss ratio of property and fire line of business. And as you can see that in 17 it is 1.7 billion the return premium and the claims incurred is 961 million, and which is almost 56.25% loss ratio. And 2016 you can see that it is 1.8 billion the gross return premium in property line of business, and the gross loss incurred was almost 1.034 billion, and which represents a loss ratio of 56.63%.
Thank you, Khaled. Thank you very much for the information, for the financial information. Now I'll introduce the DIFC where I work. I'll introduce my company, RSA. By the end of the presentation, we will show you how we come up with the decision, how we price risks. Please note that some slides are full of information, but you can read it, so we won't stop too much on these slides. Some slides contain one line or two lines, but we have to stop here too much because I want to explain a lot of things here. DIFC, as everyone should have heard of DIFC, it's the first hub in the region. When I joined DIFC back in 2010, and I started making my market visits to introduce my company, to introduce what I'm doing in the company, seeking business from brokers in the region. I used to tell them I work in the DIFC, but for some of them, they didn't hear about DIFC. So I used to tell them, okay, this is the Middle East Lloyd's. At that time, it was really the Middle East Lloyd's. Today, everyone knows the DIFC, everyone visited DIFC. Most of the brokers and most of the cedents in the region are visiting DIFC on annual basis or biannual basis or more than that. So DIFC is the first hub in the region. It's free zone. You see all the companies there, and it's not like, for example, RSA in Oman. It's not RSA. It's a company called Al Ahliya working under RSA brand, taking consultancy from RSA. But however, RSA in the DIFC is RSA. It's London office. It's a branch of London office. We have the capacity of London. We have the rating of London. We have the stamp of London. So we are making it closer. Instead of going to London, avoid the 4 hours or 5 hours or 3 hours time difference. By the time you want a stamp, they are still asleep. By the time you make a decision, they went home. So we make it closer to you. Having a branch, having the same stamp, having the same capacity, sitting at 1 hour difference in the DIFC. So today the DIFC, as I said, it's the biggest hub. It has more than 25,000 employees working in this place. As in the picture, I thought before 10 years ago, I thought this is the DIFC, this building. It's not like that, the DIFC. For those of you who never been to the DIFC, this is the main building in the DIFC. This is the icon in the DIFC. And there are like 40 more buildings around this building. So most of the insurance companies, most of the multinational, most famous banks, HSBC, Standard & Chartered, Zurich Reinsurance, Liberty, Chubb, AIG, RSA, and many others, we are there. We are meeting brokers over a coffee, finalizing business. It's Lloyd's. Exactly, it's the same model in the Middle East. Arabic speaking, English speaking, French speakers, everyone is there. Most of the multinational brokers are there. It's easy to finalize business. So I will leave you read this slide, but the most important points, as I said, it's 25,000 employees. Today we have more than 2,400 registered companies in the DIFC. It's under the microscope of everyone who wants to come to the region, start multinational business in the region. It's very attractive. Everything is there. Coffee shops are there, restaurants are there. It's very easy to finalize business. Today, I think we have a similar model. It's still early, but in the early stage, but we have a similar model in Saudi, financial. We have one in Qatar, and so on. Because this model was very successful, so our neighbors started. RSA in the DIFC, we started back in 2011. Planning to, we had an office in the region, we had an office in Dubai, but it's not a branch of RSA London. It was working under the brand, but it's not, it doesn't have the same rating, it doesn't have the same capacity, not the same stamp. We wanted to make use of the presence of the IFC. We wanted to make RSA here in the region, RSA Reinsurance Hub in the region. We wanted to use our capacity, RSA capacity being 300 million US. Why can't we use it? We can come to the DIFC, get insurance underwriters, get property underwriters, construction underwriters, marine underwriters, casualty underwriters, and those are the 4 lines we are currently doing. Our competitors, for example, AIG, for example, QB are doing more lines, but we are focusing on those lines being historically for RSA, as per our guidelines, as per our records, as per our numbers. These are the most profitable lines for RSA to be in the DIFC. Our clients in the DIFC, in the region, not in the DIFC, most of our clients are in the DIFC, but surprisingly, the biggest market for us is Saudi. And the biggest market for many of the companies in DIFC is Saudi. Saudi for us, for example, for RSA represents 42%, 2019, represented 42% of our annual production. So we cannot deny the size of business coming from Saudi, although most of the Saudi brokers, most of them are working in Saudi, not in DIFC. But today it's very easy to communicate. We are visiting them, they are visiting us. We see Chedid Re, for example, because Chedid Re organized this, we see Chedid Re not less than 8 or 10 times a year. In our DIFC office, as I mentioned, we have the group capacity, we have the group stamp, you are insuring your risks, you are doing your reinsurance with an A-rated company, which makes you very comfortable placing business with RSA or our competitors in the DIFC. Especially RSA, we are one of the oldest companies and we are one of the most stable companies, and we are one of the growing companies. We are achieving growth on a yearly basis. We have a very important added value in RSA, which is our risk management department. We have more than 70 engineers in RSA. A couple of them are dedicated to serve us in the DIFC. We send, in case we need any consultancy, we need any risk management advice, we send to them. They come back to us within no time. Again, this is our preferred territories. It's the Middle East, MENA, as introduced by Kalish. And most of our income is coming from GCC. 76% of our income is coming from the 6 countries in GCC, and 28% is coming from other MENA regions. Our this is preferred segments. It doesn't mean that we don't look into any other thing, but these are our preferred segments. Preferred based on the history, these segments didn't make big losses for us. Preferred on premium-wise, premium generated. Okay, we can waste time doing, it's not a waste of time, but I can say we can spend time doing small risk. But the time we spend analyzing a small risk is the same time or slightly less than the time spent analyzing a sugar mill, a pharmaceutical. But the premium generated in these things are very high. This is what we target, the high premium. We do paper. You don't find many multinational reinsurers in the region doing paper. We do paper. We do cement. We do steel. We do all the complicated occupancies. We also have the last line here, non-proportional reinsurance structures. Non-proportional is like when we are in doubt. Okay, do we need, and Karish knows this, do we need to be on this risk? We are 50-50. Okay, we will suggest an alternative to the broker. We don't want to miss the risk, to miss the opportunity, but still we are not very comfortable doing this risk on quota share. Reasons for that will come later during the presentation. So we suggest, okay, dear XYZ, we can consider this risk, but we cannot consider on quota share because we are still not comfortable doing this on quota share. Maybe due to past loss record, maybe because of the occupancy, maybe. So we'll come later to this. Now I'll start here analyzing the risk from or going through our process from the minute we receive the risk from our colleagues in Saudi, in Chedid, cedents, any of you, till the moment we reply back to you, thank you very much for your offer. We are prepared to do X line subject to. We will go through the process, but the process is very simple and it's very complicated as well. It's very simple because we don't rely on our mood. We don't rely on just on the sense of the underwriter. We rely on systems, pricing tools, automated sheets, automated systems, plus we cannot deny the sense of the underwriter. This is the difference between someone who got experience in the region and someone who's new in the region. Someone who works in the region for the last 20 years and someone who's coming new to the region and he doesn't have the sense. This is the sense of the underwriter. Okay, so but I will say it's 80% automated pricing tools, automatic pricing tools, pricing systems, data capture systems, and 20% the 25% the sense of the underwriter. We receive the risk from the broker, from the cedent, from any of you. First thing we do, we look into the occupancy. Can we do this occupancy or we cannot do this occupancy? Based on what? We can decide we can do this occupancy. Based on what? No, this is not a doable one. This is an undoable occupancy, restricted occupancy. We have a guideline sheet, we have a guideline table that has been almost updated every 2 or 3 years based on the losses sustained during this 2016, 17, 18. We analyze the losses in the market, we update our guidelines, we update our preferred occupancy list. Okay, 2016 we had a couple of losses in US, in Bulgaria, in Russia, in Qatar, steel mills. Okay, we will review our capacity regarding accepting steel mills. So either we will decline steel mills on the spot, this is not something we can consider, or we will increase our rates, or we will put some restrictions, or we will try to find a way to make it profitable again for us. So tobacco, for example, tobacco, we don't consider tobacco, we consider paper, but we don't consider tobacco. Historically, tobacco is never made money in the region, never ever made money. Tobacco, due to moral hazards, it's very attractive for theft, it's blah, 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 blah. So tobacco we don't consider on the spot. So for example, we are receiving a tobacco risk. This is a straightforward decline. Thank you very much. We don't write tobacco. Maybe one of our competitors didn't suffer any losses from tobacco in the past, so it's still within their capacity, within their appetite. If the risk is doable, it's cement. We do cement. We love cement. We love steel. We love hotels. We love these things. If the risk is one of them, we proceed to next step. What's next step? Doing the underwriting directly? No. there is one very important step before starting the underwriting, very, very, very important step. And if we miss this step, if we skip this step, we can find ourselves outside the DFC in no time. Big fine, first warning, massive fine, second warning, third warning, you are out. This is know your client, KYC. This is a regulatory check we do on each and every risk. We want to know our client. We want to know that our client is not a restricted client. We want to know that our client doesn't have any issues with the government, with where he works, with where his business is. We want to know that our client is not doing money laundering. We want to know where is the source of our client. How do we do this? We have systems. We have daily updated systems that capture all the clients in the region, all business in the region, putting them in alphabetical order, alphabetical manner. This is 0 issues. This is 1 issue that has been solved, blah, 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 blah. If our compliance team, if our supporting team comes back to us with restrictions, sorry, Mohammed, your client XYZ has this point, 1, 2, 3. We come back to the broker, we come back to the cedent, thank you very much. We cannot work with this client, the client. If our supporting team comes back to us, Mohammed, thank you very much. I send all the details to our supporting team. They take whatever they want. They come back to me. Mohammed, it's clear. Clear, we move to the next step. What's the next step? Underwriting analysis. We do our underwriting analysis. Before going into the underwriting analysis, before going into the details of underwriting analysis, this is, as I mentioned, it's complicated, but it's very simple. Very simple when we get used to it. Doing the same thing for the last 20 years or 15 years, making it very simple. Using the same systems every day on daily basis, couple of times, 3 times, 4 times, making it very simple. It looks sophisticated, it looks complicated, but with the sense of the underwriter, it's very simple. But what is the underwriting analysis? I'll just give you an example from our day-to-day routine. One of the gentlemen listening to me wants to buy a new car. It's the time to change his car. And he wants to buy a new car. It's Ramadan offers today. You can save a lot in your car, in the cost. You'll take the money and you'll go to the first showroom and you will buy the first car you see? Of course not. This is a decision you have been thinking of for the last couple of weeks. I want to change my car. But what do I need? I'm a family. Am I single? Do I need an off-road car? Do I need a small car? Do I need a sports car? Where I'm taking my car to off-road, I need a 4x4. Do I need a fuel economy car? Do I need a durable car? Do I need a family car? Do I need a German car? Do I need a Japanese car? Do I need a fast car? Japanese. Do I need a very durable car? I'll go to German cars. Do I need an economy car? I'll go to a Korean car. This is my analysis before buying a car. Okay, I ask my friends that if I like this car, if I like Lexus, I ask my friend who's driving Lexus, any problems with your car? What's the biggest problem? Okay, do you have any issues with the Mazda? Yes, I have. Okay, I ask another one, do you have issues with the Mazda? Yes, this repeating. There is a reputation, there is a history, okay, of this brand. So, okay, this is my analysis. I go one showroom after the other. I check the saloon, I check the motor, I check everything. Okay, I limit my choices to 3 cars. What I do after that? Do I still go to buy one of them? Okay, but still there is one step I can do. I go online, I go to any of the websites, comparing car motor websites, Drive Arabia, for example. I put the 3 cars. Drive Arabia come to me with the table with the comparison of the 3 cars. Toyota, Land Cruiser, Mercedes, G, Nissan, Pathfinder or Patrol or whatever, horsepower, height, width, fuel economy. So it's comparing all the criteria. I'm making everything clear in front of me in one sheet. Then I make a final decision. Underwriting is not very similar to that, but it's the same concept. I do underwriting analysis. I analyze a lot of things before making a decision. I'm going to write this risk. I'm going to decline this risk. What's the fair price to write this risk? Based on what I come up with the fair price, this is all we are going to pass through. Okay, so I'll start now my underwriting analysis as an underwriter. I take the risk from my friend Kalish, my colleague Kalish. I open my system, my pricing system, my underwriting system. Why we do this? Why we do analysis? Similar to why I do analysis when I buy a car. I want the most comfortable thing according to my budget. I want the most favorite risk according to my guidelines. What we use, he used his visual experience. He used Drive Arabia systems or website or comparison. What he did, similar. What we analyze, why? Because we want the most beneficial risk. We want the most favorite risk. We don't want to deviate from our guidelines. We don't want to write something very cheap. We don't want to quote a high price for a good risk. We don't want to miss the risk. So why analysis? That's why. What we use, systems. What we do, one, risk management services. We analyze the risk management of this risk. It's very important. This is number one. By this step, when we finish this step, and this step in our underwriting sheet, in our underwriting table, our underwriting system, this section by itself takes like 70% of the time. Okay? So risk management takes like 70% of the time, which means it's very, very, very critical and important, and it's really critical to make a decision whether we're going to write this risk or not. And the risk management, it's 4 sections. We will come to them later. Second, when we finish the risk management, when we're done with the risk management, we can here stop and make a decision. Yes, no. Yes, we're writing this risk. No, we're not writing this risk. Yes, we are writing this risk. We will move to next step. Natural catastrophes analysis. What's natural catastrophe analysis? The risk is located in Saudi. The risk is located in Oman. Risk is located in UAE. Risk is located in wherever. Natural catastrophes in Oman is not like natural catastrophes in Saudi. NatCat in Saudi is not like NatCat in UAE. Each one, even within Saudi, NatCat in Abha is not like NatCat in heavy rains in Abha, is not similar to heavy rains in Jeddah. How do we come up with this? We have another system, we have another sheet. We input the data. This is Saudi, this is Jeddah, this is the plant, these are the coordinates, longitude, latitude, these are our input. The system comes up with, okay, this is earthquake zone 1, this is wind zone 5, this is blah, 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 blah. And it comes up with yes or no, price. Past loss record of the client, is it really critical? Is it really important? Yes. We analyze this. We have one sheet, we have big section in our underwriting analysis talking about loss record for the last 5 years, minimum 5 years. Okay, and usually we receive loss records from our clients more than 5 years. Why is it important? For example, can we treat its risk A, risk B, and they are similar occupancies? Cement mill 1, cement mill 2, they belong to different owners. Cement mill 1 is running 5 years clean loss record. Cement mill 2 has every year has big loss. Can we treat them the same? Of course not. Accumulation. What's accumulation? This is something for RSA. This is, again, we have another sheet. We have another data capturing process to measure our accumulation. For example, what's accumulation? Accumulation is just an example. We are insuring a mall, and we are insuring the shops inside the mall. This is a policy. This is a separate policy. Now we have accumulation. Now we have double exposure within the same place. Now we are treating this risk as a mall. And now we are treating al-shaya. properties inside this mall as a separate risk. This is wrong. We are double using our capacity within the same place. Okay, how do we measure our accumulation? We input coordinates on the system, and the system automatically comes up with any exposure within 1 kilometer, 500 meters, 250 meters within the same coordinates. And hence it's an alert. It gives me an alert. Muhammad, take care. Here you have accumulation. Here you are insured. Okay, what's the problem with that? Okay, in case of nat cat, in case of heavy rain, okay, we have a capacity here. But in case of heavy rain, it will affect me twice. It will affect me on the mall, and it will affect me on the shops inside the mall. Shaya properties inside the mall. Is it good that I pay double claims because I didn't measure my capacity within the same boundaries? We will come to this later. We make business interruption analysis. This is very, very, very critical, especially in some sophisticated industries, steel, cement. Business interruption may reach 24 months, 36 months. Big fires in hotels, big fires in shopping malls. It doesn't happen every day, but still, business interruption is very, very critical cover. We don't like it, but we have to give it. But we don't like it. Nobody likes this cover, but we have to give it. Storage versus operation. Okay, how big is our storage? Usually we don't like storage too much. Most of storage, will come later to storage, the disadvantage of storage, why we don't like storage. But usually we treat the plant as a storage plant when stock value exceeds 30, 35, 40% maximum of the total sum insured. We treat this as a storage plant. Do we decline because it's a storage plant? No, but we treat it as in a different way. Terms, and by the time we finish this, we can come up with, this is our price, this is our deductibles, these are our deductibles, this is our price, this is the terms we can give, these are the extensions we can give, these are the extensions we cannot give. Why you can give extensions on some industrial plants and cannot give the same extensions on another one? We'll come to this later. This is what we call the underwriting analysis. And this is, by the time we finish this process, we offer capacity or we decline the risk. Number one in the underwriting analysis is risk management. Let's go through them one by one. As I mentioned, risk management takes 70% of the time analyzing the risk. Risk management is critically important. It's obviously very, very important. Obviously, SAMA did a lot last few years to improve risk management. It's a fantastic job what SAMA did in the market to improve risk management. And again, we will come to this later by the end of this the presentation. It's well known, the greater the risk, cement mill, steel mill, paper is totally different than writing a school. The greater the risk, the greater the probability of loss, and the greater the severity of loss, and accordingly, the greater the premium should be. Well known to everyone. Why we advise our clients to do risk management? How we convince them to invest money in risk management? For some clients, don't understand the importance of risk management. They think this is a waste of money. No, it's not. If you are a school, if you have a hotel, it's A-class business, but the exposure is different. Okay, they are A-class business, but here you don't have a boiler in the school. Here in the hotel, you have 2 or 3 boilers. In the school, you don't have a kitchen. In the hotel, you have a big kitchen. A kitchen is a bomb. They have fryers, they have boilers, they have heaters, they have a lot of, it's a bomb. A boiler is a bomb. Okay, we charge the same rate here, but we produce a bigger premium in the hotel. So I want you to, and I convince my client, I want you to identify the risk, the hazard you have. You have the boiler. I want you to take precautions to protect your boiler. You have a kitchen. You have a hood coming from the kitchen till the roof to take all the smells, all these vapor coming from the fryers, from the fatty food, from the process. I want it to go up to the roof. You have a hood. Do you understand what is a hood? It's simply a fire transfer canal that takes from the kitchen, which is usually in the basement or in the ground floor, till the top of the building. It's easily transferable in a few minutes through the fire, is easily transferable in a few minutes through the hood. So you have a hood, you need to have a special protection. You have a boiler, you need to have a special protection. You have a fryer, you need to have a special protection. When you have this special protection, then we can reduce the severity of your loss. If you have a fryer, you don't have any protection on the fryer. When the loss happens, you imagine oil. Most of the ladies listening to me suffer this in the kitchen. Oil, water, the fire is massive. Even if it's a small portion of oil, small fryer. Imagine a big fryer in the kitchen that serves sometimes more than 1,000 guests in the hotel. It's a massive fryer. Some water, some whatever happens, it's a massive fire, uncontrollable fire in the kitchen. Okay, so fryer, you need special protection. Water, of course not. We cannot extinguish fires on oil using water. You need special protection. Okay, when you invest in risk management, you protect your assets. You maintain your market share. You don't stop your business because you had a fire. Your business is running properly. You maintain your market share. You maintain your share value, the share of the Marriott, the share of the Hilton, the share of the school, the share of Al Marai, the share of your processing plant. You maintain the share. You maintain your market share. When the fire in Al Marai happened like 5 years ago, 3, 4 years ago, I can remember, they lost market share. They lost share value. Now they are back to business. Luckily, they are back to business very quickly, but they lost. Reduce insurance cost. Of course, if you are running loss-free for the last 5 years, I cannot treat you like one client that's coming with a big loss every year or every 2 years. Of course, I cannot treat you like him. Of course, my system, my data capturing system gives discount for a client who's running loss-free for the last 5 years. Risk management, what do we consider? We consider according to the industry. Do we consider the same things in cement when we compare it to hotels? I will go to a cement to do a survey. I'm a risk manager engineer, risk management engineer. Tomorrow I have a survey in a hotel. After that, I have a survey in a cement plant. Will I go to tell them in the cement plant, excuse me, I found some dust on this machine? Of course, I'm stupid if I say that, because it's cement. It's expected. But I will tell them, excuse me, you don't have enough water for firefighting. Excuse me, you don't have enough maintenance. When I go to the hotel, am I going to tell them, excuse me, I found some dust in the kitchen? Of course, yes. This is a hotel. It should be treated in a different way. So what factors we consider? From one place to another, there are differences. But the difference between these things, we summarize the common things between everywhere, between hotels, schools, shopping malls, cement, steel, in 4 categories, only 4 categories. We call them, for simplicity, we call them COPE: construction, occupancy, protection, exposure. Construction. We start the construction analysis when we speak to of course, we don't find this information in each and every plant, or each and every place, or each and every risk, but we start from here. Do you have the construction drawings? Of course not. Not most of them don't have it on site. Okay, but it's with the owner in his office. Okay, thank you very much. But from the history we know, Jeddah, the soil is rock. Okay, Dubai, the soil is sand. Okay, so from the history we know, from our studies we know. So high-rise building, which safeguards did you take during constructions, during the construction phase? What kind of foundation you have? This is a high rise. Do you want to put a 50 floors building, a skyscraper, on raft foundation? Do you have piles? Do you have, okay, tell me about your construction. Tell me about your foundation, which supports everything. Tell me about how strong your legs are. How strong your legs are to carry you, to walk all the way to your office, to do, how strong your foundation is to support this skyscraper. Soil type, imagine it, believe it or not, we cannot consider writing risks on one of the most luxury and expensive areas in Dubai, the Palm Jumeirah in Dubai. Palm Jumeirah is a man-made land. It's a reclaimed soil. We don't have a big capacity on reclaimed soil in Dubai. We have capacity on reclaimed soil in Kuwait, in Saudi, but not in Dubai. We are sitting in Dubai, but Dubai is a high earthquake zone. It's not extreme, but it's high. We don't have capacity according to our guidelines, RSA, according to most of the companies, multinational companies. They don't have big, okay, they have capacity, but not big capacity. They cannot consider writing the same capacity in a hotel that's located on the Palm compared to a hotel built somewhere else. Building codes, earthquake, wind design. Okay, Jordan, Turkey are famous. They have earthquakes every few days. They have a shake. Okay, your buildings are designed to resist earthquakes. Are your buildings designed to resist windstorms?
بيتك.
Okay. Construction type. FR is fire resistive. LFR, lower fire resistive. Inferior, where we have ACP, where we have wood, where we have like tents. This is inferior construction. There are some permanent tents in hotels. This is inferior structure. Fire will consume everything in 5 minutes. Okay, paneling and insulation, ACP, cladding. It's very, very critical now. It's very serious now in the whole region, in the world. Okay, low rise, high rise. How do we treat low rise? The same. Low rise has a rate and high rise has another rate. Of course, yes. Low rise is easy to extinguish a fire in the 6th floor while you are on land. It's easy. High rise, you need ladders, you need special tools, you need special equipment. The rate we give to low rise buildings is totally different than the rate we give to high rise buildings. Ceilings and concealed space. Ceilings, what do they hide? Sprinkler systems? Do they hide air conditioning ducts? Okay, what's the protection? Because it's hidden space, I can't see anything. The fire might start, if it's a normal ceiling, the fire will start, I'll discover it, I'll start dealing with the fire in 5 minutes. Concealed ceiling, the fire might start in one of the air handling machines or whatever. Sometimes the air handling machines are not hidden outside, it's in the ceiling itself, below the ceiling itself. Okay, do you have special protection? We need to see this. Hoods and chimneys. We have the kitchen example in a hotel, and we have chimney, the hood that runs all over the building till the 50th floor, 60th floor, till the top of the building, just to throw all the bad smell we don't want, all the fatty. Okay, after like 1 month, this hood, the lining of this hood will be fatty. Any small fire will extend in 5 minutes to the whole hood, to the whole hotel, to the whole side. What protection do you have inside your hood? How often you clean your hood? Who cleans your hood? Which materials you use to clean this hood? We investigate this stuff. Of course, okay, we are seeing this stuff on daily basis. Of course, when it comes to a 5-star hotel, Hilton, we know the standards of these chains of hotels. So if we don't find this information, in the survey report, we can assume it. I don't want to say this is the standard, but sometimes this is the underwriting sense. We can assume it. Okay, if we don't find it, we will not write to the broker, please, we need this information. We need to see, unless it's critical, unless something happened in the past and it's not mentioned in the survey report, unless there is a 10 million Saudi riyals lost last year due to a fire that started in the kitchen, extended through this chimney, through the wood, and it's not mentioned in the survey report anything about it. Okay, dear broker, please let us know what are the safeguards, the precautions, the corrective action taken by your client to avoid this in the future. Compartmentation and dividing hazards. This is something we don't see too much, but we can see in pharmaceutical plants, for example. If you go inside a pharmaceutical plant, you'll find very thick walls between department and another. So in case of loss of this department is still working. Compartmentation and dividing hazard. Sometimes in manufacturing plants, we have, it's businesses like that. It has to be like that. We have raw material storage directly connected to processing plant, which is directly connected to the finished products warehouse. Okay, are they one open space? Of course we have, okay, we will not decline it, but it's treated in a different way. Okay, we have a wall between the storage, processing, final storage. Okay, how thick is this wall? Fire resistive? 4 hours fire resistive? 2 hours? Okay, we will consider this different in a different way. Cut-offs. Cut-offs are doors, windows, doors between one department and another. Okay, we have in a hotel in Dubai, not in Saudi. In Dubai, we have, for example, liquors room in each hotel where they store liquors, alcohol. Okay, this is a bomb. This is very risky, especially with the moral hazard. Okay, if the fire starts inside this room, it's alcohol. Is it gonna spread in 5 minutes to the rest of the floor, including the kitchen, the laundry, including the engineering workshop, the maintenance workshop? They are all located, usually in hotels, located in the basement. Is it gonna spread in 5 minutes? No, there is a door. The door is 4 hours fire resistive. We have a pipe coming from one room to another. How is the opening sealed? Okay, the pipe extends. I understand. Is there an opening? Is it well sealed? Cut-offs. Occupancy. This is the second thing we analyze in risk management. Occupancy. As mentioned, hotels, industrial. Is it a warehouse? Is it a hospital? It has a rate. Hotels. Cement has a rate. This is 0.2 per mil, 0.3 per mil, 0.5 per mil, 0.6 per mil, 0.7 per mil. This rate is adjusted according to other factors. This is the standard benchmark rate. Okay, benchmark price. It's adjusted according to other standards. Loss record, construction, history. Okay, financial position in the market. This client has suffered any financial losses in the past? Have any issues with the bank? Got loans and ran away for some reason, came back? Financial history, financial position. Is it a single occupancy? Is it a multiple occupancy? Do we have one land belongs to the same owner? Here it produces carpets, and next to it, just next to it, without any separation, he produces something more hazardous than carpets, paper, to wrap the carpets. Is it a single occupancy? Is it a multi-occupancy? It makes a difference. Raw materials, combustible or non-combustible. Storage and production, separated or not. We spoke about this. Storage arrangement. We have a warehouse. Is it storage arrangement? What's the difference if we put our storage directly on the floor, or 20 centimeters, 25 centimeters elevated from the floor? In case of rain, for example, and the rain goes inside the warehouse, when it's elevated by 25 centimeters is this big. Okay, I don't think the water will reach it easily, but when it's directly on the floor, no time, it will destroy at least the first row. Is it on rack? Is the storage some insured in the policy higher than 35%? We will not say no, but we will treat it on a different way. Risk management control. We have third parties visiting us on daily basis. We have contractors coming from outside, suppliers, we have our customers. Which control customers, suppliers, visitors? This is not our plant. I don't care. I will smoke. This is not my plant. I don't care. I'll put my car anywhere in the path of forklifts. I don't care. It's not my plant. If it stops, I lose nothing. How do we control our visitors? How do we control smoking of our employees? Is there a place? These are critical things. Housekeeping. How often we do housekeeping? Housekeeping in a cement plant. Will we consider telling them you have to clean around the kiln, the furnace every day, every shift? It's not like this. It's not a textiles plant where we have to do housekeeping automatically. There should be automatic systems in textiles, because the textiles, the production is totally different. There is cotton, there is yarn, there is a lot of things in the air that may generate fire. Is the plant occupied 24/7? Is it different than when we work on one shift? Yes, it's different. 24/7 we will observe the fire in no time. Someone will observe the fire. If the plant closes Saturday, Friday and Saturday, it works one shift, so most of the time it's unoccupied. Watchmen are sitting at the door. They know nothing about what's happening inside. So by the time the fire become bigger, they will start fighting, but it's too late. Third thing we analyze in our risk management is protection. Again, protection in paper is totally different than protection in hotel, in school. Do we want to make a big recommendation in the survey report? You have to install sprinklers in a school. If we find sprinklers, that's fine. If we don't find, it's not critical. But is it important that we make a recommendation? You have to install sprinklers in the raw materials warehouse or the finished products warehouse in a pharmaceutical plant? Yes, it is. Sprinkler system, is it fully sprinklered? It's not very good to have fully sprinklered plants all the time. Sometimes sprinklers are harmful. So it depends on the occupancy. And we will come later on this, we'll make a comment on sprinklers later, when they are harmful. The design of sprinklers. Sprinklers are there, but are they efficient? This is very, I'd say very gray, because we never know if they are efficient or not before the fire happens and you start dealing with the fire. In order to understand the sprinkler system, we need to check the design of the system. We need to check the recommendations of the designer of the system. We'll come later to this. Fire hydrants, is it covering the whole plant? Is it on the whole fence? Is it at 30 meters from each other? Hose reels, is it available in each floor? Is it at the beginning of the floor? Is the distance between any two successive hose reels? This is all what the risk management engineer comes back with. Portable fire extinguishers, is it handy? Is it hidden? Can we see it? Because sometimes it saves a lot to deal with the fire the first minute. Water source, is it enough? How big is your water tank? Do you use your water tank for firefighting and for production? To what extent do you use your water tank for production? And after that, you cannot use any more water because the rest is reserved for firefighting. And is it enough to fight a big fire? This is the risk management engineer job to say yes or no. Pumping arrangements. Do you have a manual pump? Do you have an automatic pump? What's the difference between manual pump and automatic pump? Manual fire pump, you have to observe the fire, to see the fire, go directly to find the key of the pump room, open, go inside, try to operate the pump. If it works, that's fine. You'll start fighting the fire. If it doesn't work, you'll keep trying. The fire is becoming bigger. Still, you'll keep trying. The automatic fire pump, fire happens, sensors send signals to the pump operates, sprinklers start to deal with the fire automatically. Okay. Good fire brigade access to the property, fire drills. Do we have in Saudi it's well organized. We have in Saudi this is the second industrial area in Riyadh. This is the first industrial area in Jeddah. We have a full-time dedicated fire brigade here and there. And but are they available all the time? How? How do we make a judgment unless we have a fire? No, we can't. We can ask them to make fire drills every 3 months. Come visit us every 3 months. We pay for that. The client pays for that. Come every 3 months, make a fire drill. Is it done? We want to see this in the survey report. Full-time fire brigade within 10 minutes. Is it far? Is my plant in the middle of the desert and the fire brigade will take 30 minutes to reach me and start dealing with the fire? By that time, it's over. Khalas. Automatic and manual alarm systems. Full manual alarm system. Manual alarm system, is it really useful in steel plant? Steel plant, it's explosion. It's all or none. The fire it's explosion. I don't care about fire. I care about explosion. It's all or none. So when I go in a steel plant and I survey a steel plant, is it really important to check the manual fire system, the manual alarm system? No. But is it important in a hotel? Yes. It depends on the occupancy. Okay, so in my system, I put steel plant. It doesn't come with everything. It comes with firefighting, explosion, blah, blah, blah. But when I put automatic manual alarm system, when I put not available, it doesn't affect anything. Physical security protection, fencing, locks, access control, separation, physical security protection. What is physical security protection? Do I have a fence? It depends on my occupancy. Yes, most of the time, 90% I have. Of course I have. Okay, do I use locks for the alcohol rooms in hotels? Who opens the locks? Who has the key? I said alcohol is a moral hazard. Sometimes it's very attractive to steal alcohol, sell it. Before discovering this, fire. In order to avoid discovering this, it's a moral hazard. Who has the lock? Who has the key? Who locks? What are the controls, access controls? This is alcohol. Okay, I have in cement, I have very important thing, dynamite. Why I use dynamite in cement? In the quarries, I use dynamite to get the rocks. Okay, dynamite is highly explosive. Who has access to the dynamite store? Who can access? Who is the employee? Okay, separation between the dynamite store, which is highly explosive, and my processing plant. Is it always monitored? CCTV, I will not comment here. Everyone knows the importance of this. Watchman and security, they are always there on site. Do they make rounds? What's the difference between sitting at the room, at the entrance of the plant, and making rounds? Making rounds means that every now and then they will make a round around the place, the whole fence, inside, outside, they will discover anything abnormal. Fire exit signs, this is very, very well spread everywhere. Special hazards protection. Special hazards, what are the special hazards? Special hazards in cement, dynamite. Special hazards in cement, paper manufacturing, paper storage, paper bags. It's a special hazard considered as somewhere else it's not considered as a special hazard, but in cement it is. Special hazard, wood in the kitchen, is it protected? Are there any sprinklers inside the hood? Special hazard in pharmaceuticals, do they use solvents? Special hazards in so and so and so. So it's a special hazard is something that's not in each and every plant, but it is in this plant because it is the industry that necessitates having this in this plant. And many other factors depending on the nature of the occupancy. This is the protection. So we covered C, construction, O, occupancy, P, protection. And we need...
Hi, Mohammed. Since we are talking about the protection, I would like if you can explain that for our participants that based on what you define the sprinkler system is adequate and explain how it differs in each occupancy. So that would be beneficial to the participants.
Sorry, can I say your question again, please? I didn't hear you.
Based on what you define, the sprinkler system is adequate. That if it is adequate, on which kind of design that you look for each occupancy, and explain how it differs in each occupancy as well. So this will help the participants to understand it properly.
Okay, Kailash, thank you very much. I got you. As I mentioned, sprinkler system, it's there in each and every plant. But do we have the design of the sprinkler system? Any risk manager inside keeps the design of the sprinkler system, keeps it on site. Once you ask about it, they'll tell you, sorry, but it's with the owner. Okay. Any of the engineers in the region know how to read the design of the sprinkler system? I doubt. So for the time being, the best we can do, assessing the water source, how powerful the water pump is, the coverage of the sprinkler, visual. We cannot, okay, we can, when we go on a visit, we can do a test, we can test the hydrants. It's non-destructive test, but sprinklers, it's called a destructive test, which has to be done on annual basis by the client, but not by the risk engineer. We cannot ask them to operate the sprinkler system. Okay, so the adequacy of the sprinkler system for now, for the best we can do, is it the separation between any two successive heads? Is it suitable for the industry? Is it suitable for the warehouse? Is it suitable for the place? Is it upright, downwards, the head of the sprinkler itself? Is it upright, down? It depends on what's stored. Sometimes it's better to have the water coming in the shape of fountain. Sometimes it's better to have the water directly on the fire. It's not better, or it depends on the design. It depends on what's being stored here. Okay, how powerful the water, the pump is. Is it automatic? Is it manual? And I explained the difference between the manual and the automatic. Automatic, it will take, ideally, it takes 30 seconds to start dealing with the fire. 30 seconds. Fire, high temperature, smoke detector, gives signal to the fire pump, works automatically, sprinkler works automatically. More than two heat detectors or smoke detectors, one heat detector, one smoke detector works. Okay, it sends signal to the control panel that's supposed to be watched 24 hours. Control panel, the guy who's watching, supposed to be watching the control panel 24 hours, gives call to the officer. Mr. Kalish, there is a fire in this zone. Mr. Kalish takes a fire extinguisher, hand fire extinguisher, runs quickly. It's one heat detector, one smoke detector, single. Single means it's something not very critical yet. Two means no, the smoke is bigger. The the temperature is higher. It means something critical. It means the sprinkler has to work. It means the smoke detectors need to send signals to the pump to work automatically. I don't have time to search for the key, run, open the door, turn on the pump, which might be yes or no. Okay, so are your sprinklers? This is how risk engineers come up with the adequacy of sprinklers. Are your fire pumps automatic, set on the automatic mode? Visual. Is it the height between sprinklers and the first track of storage? Is it enough so water can come with a good pressure? Is it 30 centimeters, 40 centimeters? Yes. This is how we come up with the adequacy of sprinklers, and this is the only way we can use in the region. If you want the ideal thing, we need the design, we need the full design, we need the brand, we need to read NFBA 10, which gives you full details of sprinklers. Okay, anything else, Kailash?
No, that's it.
Okay, Can we start thinking together on this example? We have risk A. Risk A is, let's say, it's a cement, for example. They have oil and fuel tanks. Yes, they use oil, mazot, whatever, and fuel used for production. It's a fuel. The tanks are well separated from the processing plant. However, they are not water sprinkler protected. The client wants a PAR policy. So we have tanks 200 meters from the processing plant. There are underland or under soil pipes, underground pipes that extends from the tanks to the processing plant, feeding the processing plant. So the tanks are totally separated, but we don't have water sprinkler system in the tanks. And the client wants a PAR policy. What's best for the insurance company? We'll issue the policy. The tanks are well separated. The fire will never catch the processing plant. Processing plant is the most important. Fuel, when the fire happens in the fuel plant, okay, that's a fuel plant. We can easily call our supplier, get us some fuel. Khalas, we lost our fuel. We need some more fuel. So the insurance company, they don't want to lose the 4 or 5 million Saudi riyals premium, and we will issue the policy. Insurance company declines the risk because the fuel tanks are not water sprinklers protected. Insurance company make a recommendation. The risk engineer makes a recommendation. Okay, we will issue the policy. However, subject to installing automatic water sprinkler system on the fuel tanks within 3 to 6 months. We will come, we will revisit, we will re-inspect. If you don't install this, we will cancel the policy. Sign here, sign there. Thank you very much. Deal done. Or it's another answer. Can we have some interaction, Kalish?
Yes, Muhammad.
Can we hear like 2 or 3 opinions from our colleagues?
Can we ask? Excuse me. Can we ask here for civil defense certificate?
On what?
From the client.
Of course, it has to be one important document in the file. Of course.
We will decline the risk.
Why?
We will put the subjectivity as per the recommendation of risk engineer, and we can grab the business. How about that one?
Okay. Any other opinion?
What if there is if you find some moral hazard, even if you give the time and some claim happened prior to that time period? So how we can cater this issue as well? So moral hazard is very important in that aspect, I believe.
Any other opinion? Okay, I will choose number 4, another answer. 5 minutes ago, I said sprinkler protection could be harmful sometimes. I will never protect fuel with water. When I'm adding more hazard, I'm adding more fire. Fuel will never be protected by water. I will protect fuel by, this is fuel, this is oil. I'll protect it by foam. If I want to put automatic foam, okay, I'll make a recommendation, put automatic foam. Water sprinklers are not always the best answer. Transformers, they are protected by FM200, not water, electricity plus water. Ideally, okay, fuel tanks, not water. Ideally, foam, automatic, manual, whatever, but it's not water. Sprinklers, it's not always good to go inside the plant. This is not sprinkler. No, I have to see the hazard first. Sprinklers are suitable or not. It's not like that. I put it in each and every report. Sprinkler system. I want sprinkler system here. Sometimes sprinkler system. When I find the plant is fully sprinklered, I decline because this is not safe. So sprinklers are good, but where? Okay, thank you very much for the participants. Let's move to the next slide. Last thing we analyze in risk management is exposure. The internal exposure, external exposure, Internal exposure is coming from, as I mentioned, adjoining buildings. Warehouse is just adjacent to, this is the space I have in my plant. I don't have a bigger space. I can't make a separation. Okay, you don't have enough space to make a separation, but you have the ability to put between them fire-resistant walls. In case a fire happens in the warehouse, it will not move to the processing, and vice versa. In case it happens in the processing, it will not consume my finished products warehouse. Okay, so I want, if buildings are adjacent, it's one building separated into 3 sections, 4 sections, 5 sections. Okay, I need fire-resistant walls, ideally 4 hours. But in case 4 hours is in chemicals, pharmaceuticals, but if I'm producing water bottling, water, it's already extinguished in case of fire. Do I need 4 hours? No, I need 1 hour. Do I need 4 hours in each and everything? This is the underwriting sense. Ideally, it's 4 hours. But where is the underwriting sense? I insist on having 4 hours in a Pepsi plant. It's liquid. It's not fuel. It's not sugar. Okay. Neighbors. Who are my neighbors? I'm doing a very clean industry. I'm producing something I'm producing steel. This is not steel mill, not integrated steel mill. I'm producing like steel things for the kitchen or aluminum things for the kitchen. It's a clean industry. It's just molding, it's just shaping, it's just small ovens, furnaces, and these things. It's a clean industry. I'm producing whatever. But my neighbor is producing tires, rubber. It's very, 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 very risky. Very dirty industry. Does it affect my decision as an underwriter? Of course, yes. I don't want to be in trouble. Okay, the fire starts in the tires plant that doesn't belong to me. I'm not insuring it, but it might affect my plant. I don't want to be in trouble. Okay, it makes, okay, sometimes I agree to insure this. It's my role as an insurance company. Sometimes there are diplomatic reasons. Sometimes this is my client for the last 20 years. I cannot tell him no, but the circumstances are different. I will ask him to install sprinkler system, extensive sprinkler system, automatic sprinkler system on the wall, separating me from the neighbor. It's a hazardous industry. External storage, sometimes cables, for example, cables plants. We produce to order. I don't produce cables. I keep them in my store till someone comes to order. No, I produce to order. Okay, so once I produce, I put them ready to be ready to be delivered to my client. So I put them outside the manufacturing plant, external storage. But there are some regulations on external storage. I don't just keep them anywhere. 10 meters from the buildings, processing buildings, minimum 10 meters. The more the better, minimum 10 meters. And not too close to the fence, especially if I'm leaving them overnight. If I'm leaving them overnight, this morning, I fire my employee. My employee will come back in the evening. He knows everything about my plant. Outside the fence, he will throw. It's a moral hazard. And it happens, don't tell me no, it happens. Okay, exposure, nat cat. I'll tell you a very funny example. Here in Dubai. In Dubai, we are on a specific risk in Dubai. As per the classification, RSA classification, the maps where we measure our nat cat exposure, we have half of this risk in nat cat zone 3, half of this risk in nat cat zone 4, earthquake. So half of the risk, it's one building, big, massive building. It's one building. Half of it earthquake zone 3, half of it earthquake zone 4. We had to downgrade the whole building to earthquake zone 4, calculated our capacity based on what? On that. Okay. Construction resistant to subsidence, the soil. We spoke about it in the construction. Is it resistant to subsidence? Subsidence, did we take the precautions during the building, foundation, these things? Proximity to airports. Is my plant, how many airplanes collapsed, fell down just after taking off? Is my plant at 5 kilometers from the airport? Is it on the path of the airport? In the path of air flights, I mean the aircrafts, I mean, it might collapse on my plant. Is it on the path? Is it very close? So on. Truck impacts. Is my plant is in the middle of nowhere and on the highway, trucks are running all the time from this plant to this plant, blah, blah. Cement plant, for example. Cement plant, we get the raw material from the quarry, which is like 5 kilometers from the processing plant, deliver to the plant, deliver to the kiln, the furnace. On trucks, what's the impact? What's the possibility for the truck impact? The truck, if it touches the kiln, my furnace, which is rotating, and it's elevated on 2 bases, it might collapse. What's the possibility? What's the precautions? Is there any fencing? Okay, this is the exposure. By now, we just analyzed risk management. We are still analyzing a lot of factors. This is what we do, okay, to come up with a decision. Are we going to write this risk or no? So risk management, we did construction, occupancy, protection, exposure. Now we get the conclusion. We press on our system, calculate. It gives us a score. The score is between 0 to 100. If this score is 50, we don't write the risk. If it's above 50, we see. Move to next. If it's 70, yes, it's good. But still not a final decision. But it gives us the courage to move. But if it's 50, it's just passed. It's just like 50 out of 100. We really, let's give it a try. It depends here, but we use the underwriting sense. Okay, if it's below 50, it's a decline. We don't have to do the rest of the analysis. Okay, so.
Okay, before moving on to the next slide, let me interrupt again, Mr. Mohammed, that with a couple of questions. Okay. So, which I think that it's good for the participants to know that just the first question, that is there any criteria for defining a silent building that while you are underwriting a risk, you feel that, for example, that the building is already handed over but still not occupied 100%? Is there any minimum percentage required? You can write the risk, or you can write the risk if the security, fire protection, and all other risk features are good enough, even if it is not 100% occupied.
Okay, Kalish, listen. Silent risk is it's not like what you said. Silent risk, if there is a silent risk and still you said what percentage of occupancy? If the building has been completed, some customers are already there, this is not a silent risk. If there is one customer in the building, if there are 2 customers, if it's 15 floors building and 3 or 4 floors are running and still the owner is renting out the rest of the building, this is not a silent risk we consider. If the building has been handed over and for some reason the government, the civil defense, whomever, did not approve this, I will not insure it. If it's the civil defense, if it's for the government doesn't want to give like final license, this is not a silent risk. This is a problem. There should be a problem here. I want to avoid problems. Okay, if again 20%, remember 20% underwriting sense. Okay, why is this building silent? Is it okay? It's handed over last March and COVID-19 happened. I cannot consider this as a silent risk, Kalish. It's the circumstances. But this risk has been handed over 2015. Until now, it's not occupied. This is a silent risk. Obviously, there is a problem. Okay? Thank you very much, Kalish, but I want to avoid this. Dear Mama, please, can you help me? It's a very important client for me. It's a very important client for this insurance company. And he insures everything. But in this building, okay, Kalish, we'll try to find the reason. We'll try to find a way. But what is the reason for being a silent risk for the last 5 years? Is it if we can accept this reason, okay, we will try to give you a tailored cover. It's a risk, but why you want a PAR? Why you want a property or risk? It's silent. Okay, we will insure you against fire and nat cat, but we cannot give you all the extensions we give in PAR. And again, this is on one by one case. And again, we do some special considerations here. So silent risks, according to the definition, is risk have been handed over long time ago, or risk that has been occupied and for some reason has been evacuated, and since then it's silent for some reason, for whatever reason. I don't want it. There is a problem here, okay? Unless I see the reason, I see it's okay, it's still doable. So, but we will give a tailored cover. We want to be safe. We want to cover you as well. It's our role to pay claims. We have to take responsibility. Insurance companies pay claims, not making profit. If they make profit, it's good. They did a fantastic job. But their role is paying claims, not making premiums.
Thank you. And I have one more question that anyway we are covering the topic of COP information. So just I want to hear from you as an underwriter that which kind of occupancies you can consider with only COP information in the absence of a comprehensive survey report?
None. Without the survey report, none. Without any information, none. Without a survey report, you want to give me a steel mill without a survey report? Of course not. You want to give me a hotel without a survey report? Of course not. But you will tell me, okay, Mohammed, this is, for the time being, this is some information till we can get you a survey report. Okay, this is a big hotel. This is a hotel at the end of the day, working under XYZ brand. And I am insuring XYZ brand in many countries, and I know their standards. Do I take the risk? Okay, Kalash, I will give you the cover, subject to providing a survey report within 15 days, maximum 1 month. Otherwise, my cover is cancelled. But I will never give you this in a heavy industrial plant. I will never give you this cover in even medium industrial plant. But I'll give you this on exceptional basis in a school, in an A-class business, in a residential building, in a offices building. They are similar, more or less they are similar. A-class, we call them in the market the vanilla business. Okay, I will deviate from this requirement, and it's not deviating from my underwriting license, it's deviating from the ABC requirements, but for some time. I'm not breaching my license when I deviate because I have this in my authority. I can deviate. I have a risk management license as well. RSA underwriters, both, we have risk management license. We have the authority to deviate from risk management requirements to some extent, not fully deviate, to some small extent. We cannot deviate from this when you're offering me a paper plant without information. Excuse me, this is unacceptable. And even if you are offering me a residential building without any information, I'll tell you, sorry, this is, I need some information. I need to know, are you going to buy something that you know nothing about it? Of course not. I need to know, at least send me some photos. I need to know there is no ACP. At least I need to know there is a good construction, at least. Okay, so I can deviate to some extent, but not fully deviate.
Thank you, Mohammed.
No worries, Kalish, no worries. Okay, so by now we covered only risk management. Eli? Said Eli?
Mark.
Maya, can we take 2 minutes coffee break for everyone?
Yeah, sure.
Yeah?
Perfect. لكن نرجع we will be back at 10:50.
What's
هلا
10:50?
it's 10:48.
Okay. هلا it's not 10, it's 11.
11 بدبي, right?
طيب خلاص. Okay, we will be back in 5 minutes. Okay guys?
5 minutes.
يلا.
5 minutes, guys.
يلا.
Muhammad, should we continue?
Yalla, everyone is back.
مفروض.
خلاص يلا I am back. احنا can we unmute يا إلي just to make sure everyone is back?
Yeah, back.
Okay, yalla. So
Okay.
So by that time we finished the most important thing, 70% of the effort, which is risk management. When we took this break, I recognized that I'm running very slow and we only have 1 hour and we need to leave some time for the questions. So I'll try to run through the coming slides as quickly as I can. So from our experience in the MENA region, especially in this GCC area, most of the problems are coming from housekeeping, warehousing, electrical inspections, thermographic tests, and electricity, especially electricity. This is the most common reason for fires we find in the loss adjuster reports. Lack of documents, self-inspections. What's the importance of self-inspections? Self-inspections is like checking your car water every now and then. You don't put yourself in a situation you are traveling and your car is running out of water. You will find it coming very hot, the temperature is very hot, you don't have water, you're putting yourself in trouble. Checking your tires every couple of days, checking the pressure every couple of days. Self-inspections is checking the quality of my business on daily basis, on weekly basis, on monthly basis, on biannual basis. Some items I need to check on daily basis, some items I need to check on weekly basis, and so on. And I have to have checklists. I don't check visual. I don't leave everything to the mood of the risk manager who's checking this. I don't want to give him the opportunity to say, yes, I checked. I need a signed copy, at least. Hot work permits, hot work. Imagine the biggest hotel, one of the biggest hotels in the region is the Atlantis. And the Atlantis, on the first soft day opening, it got $30 million loss because of hot work. The contractors were still welding on the roof of the Atlantis, and they didn't have when I went there, they handed over the risk, and they had some small things to do, and didn't have any hot work permit system in the Atlantis. If I want to put all these concerns, the 6 most common concerns risk engineers come with from any plant, from most of the plants, these are the most common concerns. If I want to put them all under one name, management controls. I'll call these management controls. Yes, they are management controls. Now, we did the risk management analysis, 70% of the work, yes or no? Yes, we will go to the next step. Before going to the next step, let's see some examples of housekeeping, of the concerns in the region. Housekeeping, before, after. Of course, you can recognize the difference. I don't need to talk too much. At least psychologically, you have good working space, clean working space. Psychologically, you will produce. Psychologically, you are safe. This is the picture to the left, in the left of the screen. This is a manufacturing area, and they are storing on top of the control panel. This is the control panel room. This is where they notice any defect in the production. This is where all machines give faulty signals. There is a fault in this machine. This is where they monitor the whole plant in this room. See, imagine this room. Next one is the gas cylinders. This is oxygen used in welding, argon used in welding, and they are kept like this. They are kept with the oil drums in one room, unchained, unprotected, nothing. Management control. I call this management. I don't call this. I call it management. No management here. Same. I don't want to stop too much on these photos. You will see them later. See this fuel tank. Fuel leakage in a plant. Imagine one cigarette butt. I'm smoking a cigarette. Imagine I throw this now here. Imagine, okay. Imagine this fuel, this gas storage tanks, the small tanks, full tanks, full and empty. Imagine they are kept like this, okay. What's the use of having this fire hydrant? What is the use? It's hidden. I cannot see it. If I need it, I can't find it. I can't see it. What's the purpose of putting it here? Management, self-inspection. Someone has to pass every week. See this? Come, remove this tree from here. Cut it. Tree is not more important than having a safe plant. Imagine a fire starting. Okay, these are not very heavy fire load, but imagine a fire starting in the left side building, and imagine if it's not this stock, it's cotton or it's plastic or whatever. Easily, it will go to the next building through this stuff. All the passageways, all the corridors have to be kept clear of any stock. This is what we were discussing like 5 minutes, 10 minutes ago. Storage, outdoor storage. Is it the left one? Is very. I'm storing wooden pallets very close to the fence. Is it okay? I have, and it's very close to the pump room. In case of fire, it will not even allow me to check the pump room, the fire pump room. The next one is storing things very close to the production place, production area. Okay, they are ready to be loaded, but still, it's not safe. Do you want me to comment? Do you want me to make any comments here? It's high voltage cables. Imagine it like this. This is management. This is lack of management, lack of ABC management. Okay, this is what we were saying again a few minutes ago on the penetrations, wall penetrations. The wall penetration is not sealed. Okay, it's a wall penetration. It happens everywhere. I want to extend some pipe from this room to the other room. Okay, I make the hole in the wall, but I have to seal it. Okay, let's take this example. Risk engineer conducted a survey in a modern 5-star hotel in Riyadh. Submitted his survey report with the following findings. Management doesn't use self-inspection list at all. Thermographic tests never been done since opening. Okay, hot work permit is not used, or the one that's used is not sufficient. This is a 5-star hotel, well-known brand, chain, and everything is okay except the 3 things. Management doesn't use self-inspection, thermographic tests, hot work permit. What will you decide? Can we unmute you, Eli?
Sure. Anyone who have an answer or would like to comment can
I
remove the
want
mute
some
and-
interaction from the guy. I just want to make sure nobody slept.
Yes, may I participate, please?
Yes, go ahead, please. Feel free.
We can select option number 3 to issue the policy with the subject of recommendations.
This is the best answer because this is a 5-star hotel. Thermographic tests are important, but in a 5-star hotel, I don't have really much high voltage cables. It's mostly medium voltage. The highest thing is medium voltage. So thermographic tests are important, but they are more important in high voltage. So it's a hotel, and it's a 5-star hotel, and it's a new one, modern. So I don't think there will be a problem if I put a recommendation that every 5 years you need to check your cables. Okay, management doesn't use self-inspection. Okay, is it critical? It is critical where we saw the exposed cables, but in a hotel, okay, you need to check, but I'm not declining the risk because of that. I'm making a recommendation. Hot work permit used isn't sufficient. It is used. The management is aware that they have to use it, but it's not sufficient. Okay, I'll make a recommendation, but I will not lose the business because of that. Thank you very much.
Most welcome, boss.
Now we finalize the risk management. We will go to next one. Next one is natural catastrophes. Natural catastrophes, how do we measure the natural catastrophes? We just put, it's easy, we just put the coordinates of I'm insuring 5 locations risk in Saudi. It has a warehouse in Jeddah. It has another warehouse in the central region. It has a warehouse in the eastern region. It has 2 processing plants, one in Jeddah, one in the MEM. And I'm analyzing this. I just put my coordinates on the system. Location 1, location 2, location 3, location 4. It gives me all the data. I put the data, it gives me the result. This is high NatCat zone. Luckily in Saudi we don't have high earthquake. Mostly we don't have, yes, we have some in some places in the western region, but not much. It's not compared to Turkey, it's not compared to Aqaba in Jordan. It's not compared even to in UAE, in Fujairah. We have extreme zones in Fujairah. Okay, so it gives me analysis of what NatCat we have in this region, what NatCat we have near to this warehouse in the MEM, nothing. What NatCat we have in this warehouse in Jeddah, nothing, mostly. Okay, high exposed areas, 3 or 4, we have special prices here, and limited capacity, by the way. Frequent or severe? Is it frequent? Is it like, okay, let's compare the floods that happen in Saudi, the heavy rains that happen in Saudi on a yearly basis to what happens in Oman, which is frequent and which is severe. Oman, it happens every 3 years, but it's massive. In Saudi, it happens every 1 year. Okay, you feel it's massive because you haven't seen worse, but believe me, what happens in Saudi is nothing compared to what happens in the world. Local precautions taken by the insured, are they okay? Do they have water drainage system in case of flood, in case of heavy rains? Is their plant well designed to get rid of water? And it's not only the plant, is the government drainage system reliable? What's the point of having a reliable drainage system in my plant, which gives to an unreliable central government drainage system? We need to check this. Modern industrial areas, yes, mostly they have a reliable drainage system. What's the drainage system design in my plant? Are there any aggregate limits? It makes the underwriter comfortable. Okay, it's not that when a flood happens in Jeddah in May followed by a flood happens in Jeddah in July, followed by a flood happens in Jeddah in October, I have to pay 100 million, 50 million, 70, I don't have to. Okay, there is an aggregate cap in the policy. Maximum net cat limit, maximum flood limit, 25 million. So from the beginning, the underwriter knows, I put this on my pricing tool, 25 million is the cap. My price is calculated based on maximum loss, 25 million, which is totally different than 170 million. Is it higher deductibles applied on net cat? Yes. In some countries, it's ABC, it's by force. In some, even in Saudi. In some other countries that are highly exposed to earthquake, for example, in Jordan, in Lebanon, it's becoming like ABC in the policy. 1% each and every loss subject to minimum XYZ earthquake deductibles. So when we see higher deductibles, we are more comfortable. Examples. This is the picture in the corner in the lower right corner. This is Saudi. Compare it, just compare the nat cat in Saudi to the one in the up right corner. Just compare this flood to that flood. This is an earthquake in Turkey. The other one is earthquake in Japan, all Japan. Just compare the flood. I don't want to see the earthquakes. Just compare the flood here and there. In Saudi, I can see cars are running. This is a Camry, white Camry. It's running, it's driving. Guys are enjoying the flood, and you know that. But here, no control. They don't have a control. Believe me, sometimes the floods, the hurricanes, it destroys cities. So what we see in our region is nothing, luckily. I'm not going through the numbers here, but this is just to give you can read this later. It's you'll have the presentation. You can just, if you want some information, you can go through this slide. But it gives you an idea of the claims, nat cat claims that happened within 7 months, between Feb 2019 and October 2019 globally. And this is not everything. Just calculate, do the mathematics, see how much industry loss, how much economic loss. I'm not going through the details, just leave it to you.
So Mohammed, I have a couple of questions, like to discuss it further, since we are talking about the nat cat perils. So what are the major concerns of an underwriter in this region, especially in Saudi Arabia's nat cat perils? And one more question that I have to ask, that what is your major concerns while writing cars in open? And what is your appetite for that, and what improvements will make it an acceptable risk in your experience, that the cars in open?
Okay. Nat cat, usually we capture the data on our system, our pricing system or mapping system or whatever system we use. We use a system called Gaia. Okay, we put the data on Gaia and it comes up with the nat cat exposure in this region, in this area, in these coordinates. Okay, in Saudi mostly it's heavy rains and floods, but is it to the extent that we decline risks? It's not yet, because we calculate our nat cat exposure based on expectations and history. Historically, this started to happen in Saudi only 10-15 years ago. When you compare earthquake in Saudi, it's 0. When you compare earthquake in Turkey, there is a history, 100, 200 years happening every 2 or 3 years. So there is a shake every week. There is a big shake every month. There is a critical one every 6 months. No. Saudi is not like this. This is Turkey. This is Japan. Japan buildings are designed on wheels. They move with the earthquake. Okay. So in Saudi, it's mainly floods. But is it to the extent that we have to decline floods? It's not yet. Historically, it's only happening for the last 10-15 years. So we write cautious. We are very cautious. Even Oman, it started to happen recently. We write business in Oman. We have an office in Oman, but we are cautious. We put limits. We put restrictions, higher deductibles. But still, it's not that we cannot consider this country, this zone, because of high net earthquake. It's not Turkey, it's not Japan. Okay, cars in the open. Back to your concern. Cars in the open. Cars in the open. This here, we said about history here. How many claims happened in the last 15 years? Cars in the open. And how big are the claims? It's not that how many claims. How big are the claims? How many, Kalish? You are a broker in the region for 10 years now?
Yeah, almost 10 years.
Okay. How many claims? How many claims you saw cars in the open?
There is a lot. We saw a lot of failed claims.
How big is the claim? Each claim? Millions.
It's around, yeah, in millions, in 50, 60, and 35 millions around.
Okay, and it's happening every year, every 2 years. History. Yep. This is what we call historical claims. It's happening. We cannot avoid it. I can avoid it. As a reinsurer, as a fact reinsurer, fact means I can choose or decline. I don't want to lose money. I can avoid it. But as I mentioned, my role is to pay claims. It's not that I want to make premiums and don't pay claims. So I have also to help my clients, to help my brokers, to help my friends to find a solution. Cars in the open, one solution, we are writing with you, Kalish, and you know that we are already participating on most of the accounts in the market. I don't want to name accounts, but you know that we are on most of them. Currently, I'm working with you this afternoon on one of them, one of the biggest. Okay, so we are on most of them. In Saudi, in UAE, in Oman, in Kuwait, we are on most of them. Solution number one, avoid the nat cat, avoid the flood, which sometimes is not very practical. The client's main concern is nat cat. Okay, we put the cap. We want the client to be comfortable, but we also want to be comfortable. So we will put the cap. Sometimes it's not acceptable. Okay, you as a broker, you have a role to do. You have to find someone who accepts the nat cat and to give it to someone who wants to be on the risk without the nat cat. Non-proportional, which I mentioned in my first slide. This is the non-proportional. Okay, so you place the primary 100 million somewhere, giving the client, because the biggest claim that happened in the last 15 years is 80 million. So you'll tell the client, okay, we'll cover you up to 100 million. You are safe, we are safe, giving me the risk on excess of 100 million, I'm safe. The client is happy. Someone has accepted the primary 100 million, including the nat cat. He is happy with the massive premium, because most of the premium goes to this layer. We are happy, everyone is happy. Another solution, if we want to stop this drama and we want to stop giving you headache, placing primary layers, excess of loss layers. Okay, this happened here in Dubai. They designed specific areas near Abu Dhabi, near the ports, specific storage areas, huge, massive, big precautions, covered areas. It's costly, I understand, but it will reduce. You remember, Kalish, we worked on a couple of accounts last year. One of them was cars were stored under a shed, and the other one were in the open. The ones under the shed, how was our approach? We accepted quota share. We accepted from ground up because it's protected. Okay, so what happens now? It's class. It's our rule. It's insurance. We have to pay the claim as long as precautions are there. As long as I put on my system precautions are there, no one is gonna blame me. No one is gonna. I need to cover myself as well. No one is gonna blame me. I did my job. I did a very good underwriting job. What happened now is this is fate. Okay, I didn't skip this. But when it's unroofed, not under the shed, we have to price it. We have to avoid it. We have to find a solution. Here in UAE, they designed massive storage areas in some specific plants used by all. Okay, it leads to accumulation, but used by all car dealers near Abu Dhabi, near the port, near Dubai, near the port. This section is for Toyota, for Al-Futtaim. This section is for a tire, storing Ford. This section, and there is very reliable, very reliable drainage system. In case of floods, direct, nothing. In 2 hours, everything is dry. Okay, the best answer in Saudi, if it's very costly, sheds. I know it's costly, but on the long run, it's saving. You will save a lot of insurance cost. Okay, and your assets, and your reputation, and your share value, and your market share. This is identifying the hazard. Okay.
Okay.
We move to next one. We finished our risk management. We finished our NatCat. Now we turn the page on our system. NatCat gave us a price. Risk management gave us the allowance to proceed. Now we move to the third page in our underwriting system. Loss record. Loss record. To what extent is it important? It is important. It is very important. I would prefer, as an underwriter, to support a risk that has suffered in the past one big loss rather than one massive loss, rather than supporting a risk that's suffering losses on daily basis or on monthly basis or on weekly basis. One big loss, khalas, it happens. It's industrial risk, suffered the loss, but the management was aware. They took the precautions, but it happens. Losses happens everywhere, every day, for electrical reasons, for whatever reasons. Rather than supporting a risk that losses are happening on daily basis or weekly basis or monthly basis, it consumes my time to handle the claims. It reflects poor management. It reflects that the management relies on the insurance company. Okay, we will come to this later, slide 50 something, 52, 53. What did SAMA do when they increased deductibles in the market? We avoided all the small losses, okay, which gave us the courage to be very aggressive in Saudi. Very good step. So we'd rather prefer, I would rather prefer, and everyone, believe me, to write a risk that suffered a big loss in the past and the management stop. There is a mistake. We did a mistake. We need to stop here. We need to see why this happened. We need to take precautions. This is a management. I call this a management. I prefer to work with a management rather than a management that doesn't care about small losses. So what? It's a small loss. Believe me, small loss, small loss, small loss, small loss. The big one is coming very soon. Okay? So to what extent the loss ratio is important? It is important. Frequent losses, we put this on our system. One loss, March 2019. One loss, April 2019. One glass breakage, May 2019. One water leakage, June 2019. This is too much. It consumes my time. It consumes my colleague's time who's handling claims. Okay. Severe loss, like what? NatCat. It's nothing to do. Management did nothing. It's a NatCat. It's coming. It's NatCat. VCE, vapor cloud explosion. Vapor cloud explosion, it's like in fuel tanks. There is a leakage, fuel evaporates, make a cloud, explosion. It's a kind of NatCat. Okay, so it's a severe loss, but it happened. Its management has nothing to do with it. I prefer to write a risk that suffered a big loss in the past rather than writing a hotel that's suffering a loss every week. Okay, what if I go to survey a risk after a claim and I found that the management took precautions? I will greet them. I'll give them discount next year. Okay, I put some recommendations to the management and they are not complying. Excuse me, I have to cancel this risk. Okay, this is the loss record. We analyze the loss record. It gives us the ability, clean loss record 5 years. I give up to, believe it or not, 30% discount of our benchmark rate, up to 30% discount. It has an impact, big impact on the rate. Okay, another question. Risk A and B, 5-star hotels, both produce the same premium, Saudi riyals 1 million a year. Risk A had a boiler explosion. This is exactly what I was saying a minute ago. Boiler explosion, 2015, 5 years ago, 10 million Saudi riyals claim. And since then, it's clean loss record. Risk B submits to the insurer an average of 15 small claims every year. Water leakage, small fires, glass breakage, blah, 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 swimming pool, whatever. Okay, the total claims, 500,000. So obviously risk B is still making money. Okay, I take 1 million premium, pay 100,000 claims. I pay commissions, I pay my acquisition cost, then I'm left with 200,000, 300,000. It's making money. But believe me, the big loss is coming. When the management doesn't care, the big loss is coming. I don't need an answer from you because it's very, very clear and obvious. Which one? Okay. Accumulation. We calculated NatCat, we calculated risk management, we calculated. Now it's the accumulation. Accumulation, it's another map within our underwriting system. It just gives me an alert. Mohammed, take care. You are writing too much in this area. Okay, I want to deploy 50% line on this hotel. Mohammed, this is the system. Gives me an alert. Mohammed, take care. You have exposure more than $1 billion within 100 meters from this hotel. See this. RSA is on most of what you see in this photo. We have a big accumulation in this area, and that's why we amended our system, our accumulation system. See this. See this figure. We have accumulation in the clock tower, with all the hotels in the clock tower, with all the hotels in one. It's a massive accumulation. Imagine, and this is mountain. Imagine one earthquake here. We will close. You will not see me again. Believe me. But luckily, we started managing our accumulation. We are within the limits. We are not exceeding the limits. It's not only about property. Our system captures data from the property input, from, you see these yellow cranes, from the engineering. It's at the end of the day, it's one company. We are sitting in one office. We have exposure on the property. We have exposure in the engineering. Our system captures both because it's, at the end of the day, it's one pocket. It's RSA. If something happens here, we will pay double. We will pay property, we will pay engineering. Okay, so we will go back to the accumulation. Simply expressed, several insureds have exposure in the same EML block. EML block is what we see around the mosque. Examples, shopping mall. I gave this example at the beginning of the presentation. I said, we're insuring the shopping mall and we are insuring Al-Shaya properties, Landmark Group. Landmark Group, they are inside the shopping malls. Al-Shaya, it's inside the shopping malls. So we are insuring the shopping malls, and what's inside the shopping malls? Carrefour, it's Majid Al Futtaim properties, and it is in each and every shopping mall. So we are insuring the shopping mall and Carrefour, double capacity in one place. Big mistake. This is the accumulation. It gives me an alert. Muhammad, you are deploying maximum capacity in this shopping mall. You cannot write Carrefour because you already have maximum capacity. Okay, Muhammad, you have only 10 million capacity you can deploy in Carrefour. Okay. Example, shopping malls, airports, and blah, blah, blah. Warehouse parks. Single loss might exceed treaty protection, company maximum net exposure, limit to a single risk. This is what we're saying. Risk location recording, latitude, longitude. We take the latitude, we take the longitude, put it on the system automatically synchronizes with what it has already. Muhammad, take care. Systems and softwares available, our mapping system. And what's the obstacles here? Sometimes when we write to the broker, we want the coordinates. Okay, I don't have it, and we need your code tomorrow. One of the problems. Okay, accumulation checks is the responsibility of each underwriter and should be done prior to risk acceptance. Okay, this is an example of accumulation. Another example of accumulation. We are insuring the whole shopping mall, and we are insuring 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 shops. Double capacity. So we have to either reduce our capacity on the shopping mall or don't accept the new risk, the Debenhams, the Carrefour, the whatever chain, because we don't want to put 50 million here, 10 million here. We are exceeding the capacity in one place. This is accumulation. We need to take care of accumulation. Business interruption is...
One question, Mohammed, that that while considering the accumulation, what is the normal distance that you're looking for, like, or how it differs on each occupancy? Can you just elaborate that?
It's on risk by risk basis. Accumulation, we will not insure two risks, because we have special treaty for accumulation. We pay a lot to buy a special treaty to manage our accumulation. So we will not say, no, we are not going to insure two adjacent buildings, two adjacent factories in Jeddah industrial, second industrial zone. No, it's not like this. Accumulation, we don't want to put maximum capacity in one building, in one shopping mall. We will insure the building, but we will not insure the tenants. If you are talking about not accumulation, if you are talking about how do we calculate our capacity, this is different. This is EML. Okay, so if we will come to this later if you don't mind, Kalish. There is one example. It's coming very soon. Business interruption analysis, it's very important. I'm not going through the whole slide, but it's very important to calculate business interruption prior to. It's critical in some industries, heavy industries, especially heavy industries. Big losses lead to, we may pay, sometimes it happened, believe me, it happened. We paid 1 million Saudi riyals physical damage loss and 28 million Saudi riyals business interruption. It was one fire in one pharmaceutical plant, one pharmaceutical room. The single patch cost 10 million Saudi riyals, and luckily the damage was one machine, but it's very sophisticated machine, and it stopped the whole production for 8 months, 28 or 29 million Saudi riyals. So it happened that we pay this big on the physical damage and this big on the BI. It's important, it's critical. We don't like it, you don't like it, everyone doesn't like it, but we have to cover it. What we look at when we consider business interruption, we look at the profit. We look at, for example, you have one famous, I don't want to mention any names, famous manufacturing group in Saudi producing yarns here, producing textile here, producing latex here, producing XYZ, 12 plants to come up with the carpet. If one of these, it's a big chain, and one factory one, they even call it factory one, factory two, they don't give names. Factory one, factory two, factory three, factory four. Factory four, stop, fire, loss, total loss. Factory one, factory three, two, factory three, still producing, but for what? We are feeding factory four that stopped. Factory 5, 6, 7, 8, they are still working, but for what? Interdependency. All the factories are relying on factory 4. 1, 2, 3, they cannot feed 5 directly. There is a step in the process happens in 4 that stopped. So this is interdependency. Does factory 4 rely on, okay, the product that's produced in factory 4, can I buy it from another source? Yes. But can I sell the product of factory 3 to another source? Yes. Okay, it will take me to the calculation. How much was it supposed to be if everything was perfect? And how much is it now? And how much headache? And how much blah, 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 to sell the product of factory 3 to someone, and to start buying the product that has been produced for many years in factory 4 from us. It's a big story, and I have to review all the documentations from the client. This is what I was supposed to produce. This is what I'm producing now. This is the difference. This is the overtime I'm paying. This is the loss. Cement. It's steel, paper. Anything in the middle of the process will stop the whole process. BI is we don't like it. Raw materials, process, finished products, raw materials. Okay, my supplier stopped supplying me. I don't have raw materials. How can I produce? Do I have another source? Do I have a backup? Do I produce to order cables? Okay, or I produce and flood the market. This is my production, please. Okay, factors to be considered. Location. Is it essential to the business? Do I need to be here in this location? What if the owner of this, what if I rent this location and the owner decides to increase the rent, or yalla, go, I don't want you. Is it a brewery? I need to be within the farm. Is it whatever? Do I need to be here? What if here is not available anymore? Can I relocate? How long it takes me? Special construction, specialized construction. Is it like, is it cement? This is a specialized construction. Cement, it's not that I go online, I want to buy a cement plant. Okay, this is the kiln. No, it's not like this. The engineer comes to the site 5-6 times, take measurements, take blah, 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 capacity, and they start designing the kiln, the most important machine, the kiln. Okay, and it's installed, it takes like 5 years to construct, 3, 4, depends on your capacity, on your finance. Okay, so what if I have a big accident, explosion in one of the kilns? Can I replace it in 2 months? Of course not. It needs minimum 24 months. Machinery, is it special machinery? Is it 3 items? Is it cement? Special, yes. Utilities. Do I have electricity? Do I have gas, water, steam, oil? Some utility are produced inside. Some are coming from the government. Electricity from the government. How many sources I have? What if the government stops? Do I have another line? What if they have a problem in this line? Do they feed me from another line? Do they feed me from a second line, a spare line? Do I have enough generators to run the factory if the government has a problem? It happens. Customers, suppliers, we discussed this. Planning for a disaster. We're currently living a disaster. Did we plan for it? No. Planning for a disaster. If I have a fire in plant 4 that we discussed a minute ago, plant 4, do I have customers to buy my product in plant 3? And do I have a supplier who will supply me with what I was supposed to produce in plant 4? This is a planning disaster. Planning for a disaster. Okay. Done with BI analysis, we will go for one of the most important extensions in business interruption, CBI. CBI is a big thing. And again, we don't like business interruption, but we can survive with it. But we hate CBI. CBI, we hate it because it's beyond the control of my client. It happened somewhere else. My customer suffered the loss. My supplier suffered the loss. He's not supplying me. Why do I have to stop? Because my supplier suffered the loss. It's unfair. And the insurance company, if customers and suppliers are covered, we have to pay. But my plant is running. It's perfect. But my supplier suffered the loss. So it's beyond me, beyond my management, beyond my hands. Something happened somewhere else. One of the most critical extensions. We don't like it. I will give you an example on that. XYZ company is a sole manufacturer and supplier of a unique needle used in cancer treatment at ABC Medical Center. XY company suffered a severe fire that caused shutting down production line of needles for 3 months. As a result, ABC Medical Center is unable to service more than 10,000 patients and suffer a loss in profitability for the 3 months. They come back to me, Mohammed, we suffered a business interruption. Excuse me, the business interruption happened in your plant? No, Mohammed, it didn't happen in our plant, but we had a suppliers and customers extension in our policy. So you covered us as an insurance company against customers, suppliers, and customers. Okay? Cement mill A has 4 lines working on 60% capacity each, while cement mill B has a single line working on 100% capacity. Okay, true or false? Business interruption impact is higher in cement mill A. True or false? Cement mill A has 4 lines, while cement mill B has only 1 line, working 100% capacity. Okay, let's think. Big fire, explosion, whatever happens in cement mill apart from Nakkat. We don't want to think about Nakkat now. It's a fire, it's an explosion. Happened in cement mill A that has 4 lines. It will happen to the 4 lines? No. It will happen in 1 line? Yes. It will affect the one, let's suppose it happened to line number 2. It will, to some extent, line number 2 will totally stop. It will affect to some extent its explosion. It will affect to some extent line number 1. Maybe because line number 1 is located only at 30 meters, which is not enough. And is it going to affect line number 2? Maybe, partially. Okay, what can I do? I will increase the capacity of line number 1 when I repair it, which will not take more than 2, 3, 4 months. I will increase the capacity of line number 2 because it's working on 60%. I can increase this to 100%. Still, I have the capacity. Okay, and line number 4 is still 100%. It's still working on 60%, and I can increase this to 60% while repairing line number 2 that suffered the total loss. So I'm still producing. I can still push my capacity up. I can make it from 60% to 100%. So when I see a cement, but mill B, cement mill B, 1 line, total loss or none. So when I see a cement mill that has 1 line, I don't like it because it's all or none. It is the loss BI, I will pay it all if something happens. Cement mill A makes me more comfortable. It's 4 lines. Okay, I'll pay BI. I'll have to pay BI, but I still have production. So BI impact is higher in cement mill A? No, it's false. Okay.
Before moving on to the next slide, Mohammed, can you explain the detail of access extension as well with some examples?
Sorry. Tell me again.
Can you explain the detail of access extension as well in detail with some examples?
Kalish, we are staying home, present at home, and you are asking me about denial of access, Kalish? What's happening now is denial of access. I'm giving this presentation from home because of denial of access. Okay, denial of access, it's exactly what's happening now. Denial of access is everyone, it has first to come from an authority. Okay, it has to come because all shopping malls now are closed. Most of them are closed. Okay, they will start opening, but let's think 2 weeks ago, closed. It's denial of access. Why? Is it denial of access because something happened close to the shopping mall? Is there an earthquake in this area and the mall is safe, but the next building has collapsed and there is a denial of access? Yes, it is covered. Is it covered? Oh no, we cover in our policy. Denial of access is a big issue, but because there are many wordings. Okay, so denial of access when it happens inside my property is different than when it happens outside my property. Okay, excuse me, Kalish, this denial of access happened because of earthquake and your building is safe, but somehow, somewhere near your building has collapsed. I don't have to pay you. No, Mohammed, excuse me, read your wording. You covered me against denial of access up to 1 kilometer, up to 5 kilometers, up to 10 kilometers. So anything that happens within the 10 kilometers, even if it doesn't belong to me, even the cause of loss is not coming from inside my plant, I'm covered. COVID, Corona, is it covered? This is coming from civil authority. It's coming from government. You all have to close the shopping malls. Is it denial of access? Yes. Is it covered? No, because the loss did not happen inside my location. It happened due to no. Excuse me, Mohammed. Read your wording. You said you are covering me against virus, disease, pandemic, and the denial of access has been caused because of virus, disease, pandemic. So you have to cover me. Okay. This plant is a rice mill, and to save transportation, to save blah 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 blah, I built my plant within the farm itself, very close to the farm, and it's only from the highway. It's only one bridge crossing the river taking me to this farm. Okay, bridge collapsed. No other way to reach my business. My business is running, but what's the point? My staff cannot reach. Kalish, you write to me, Mohammed. This is a denial of access claim. Excuse me, Kalish, I'm not covering the bridge. No, Mohammed, you are covering me up to 1 kilometer. No, Kalish, the bridge is 5 kilometers. I'm not covering this. I'm covering you denial of access up to 1 kilometer. The bridge has collapsed, but it's at 5 kilometers. I'm not covering this. Excuse me. Okay.
Okay.
Okay. Storage. We spoke too much about storage. Storage is very important. We analyze. We don't want to go through this in too much. Is it yard storage? It's important to have covered or yard. Yard, exposed, highly exposed. Is it that we store everything in the yard storage? We usually, insurance companies and reinsurance companies, we put a subjectivity here. Subject to commodities stored in yard storage are designed to be stored in yard storage. So don't give me paper, store it in yard storage, suffer. So usually they say yard storage subject to, between brackets, fire, loss only. So we don't cover hail, rain, when we are storing paper in yard storage. It's not my problem. It's the client's problem that he doesn't have shed to store paper. Okay? Is it owned building or rented building? It's important. Is the production cables, is it produced to order, or I produce and flood the market? What if the market now is suffering, like these days? The market is suffering. No one is building, so I have flooded my warehouses with cables. No one is buying. So I have to stop production. Do I have to stop my product? No, I produce to order. Firefighting and protection event, is it sprinklered? Is it that I'm storing on site? Is it that my warehouse is close to my production? Something happens here will affect there? Is it a lot? So we analyzed risk management, nat cat, accumulation, storage, pricing. I will not talk too much about pricing. It's an example. Risk A is a 5-star hotel located in country in Saudi, while Risk B is a 5-star hotel belongs to the same chain, Marriott, Hilton, Sheraton, as Risk A, but located in Oman. Do they enjoy the same price, same deductibles? Risk A and B are in the same country. This is a different one, but different zones. It's again the same. Jeddah, Riyadh. Riyadh is a desert. Jeddah is not. It's very close to the Red Sea, the port. You have two ports. So in Oman, we have high nat cat. We cannot price it similar to the one in Saudi. In Oman, we have floods, we have tsunami. We cannot price, it's the same. But don't tell me, Mama, you accepted my, okay, in Saudi, you accepted my hotel in Oman in Saudi at a lower price. It's the same chain. No, excuse me. It's not about the chain. It's not about the quality. It's about also the location, pricing. Okay. SAMA deductibles in Saudi, are they in Oman? If the loss happens in Saudi, the client knows that he has to pay million Saudi riyals. Is it the case in Oman? We cannot price them the same. It's unfair. Now, done everything, we have one button. We have to click.
One question, Mohammed, just want to clear it before moving on to the next topic, that based on your experience, why the major cause of the fire losses in this region is short circuit? So is it because of improper electrical installations, poor maintenance, or do you have any other opinion?
I have another opinion, but I want you to accept it because I don't want to be diplomatic here. Okay, it's the most easy course that loss adjusters, most of the loss adjusters put. Okay, and practically, if something happens in whatever, and the fire destroyed everything, tell me, are you going to put yourself in the loss adjuster's shoes? will you be able to easily identify what had happened? By all means, the loss will be paid. Okay, so the most easy to put it is electric. This doesn't mean that no losses happen in the region due to electrical faults. It happens. But in 50% of the cases you read it's electrical fault, while the reason might be something different. It might be friction. It might be overheated. It might be electrical. But this is the most easy reason mentioned by loss adjusters, believe me. Okay. By now, we've done our 11 sheets underwriting system. We press a button. The button gives us a final score. We offer our capacity. We got our price, which is higher. If it's lower, okay, that's fine. We take the high price. But if it's higher than what we are offered, you put our terms. Okay, thank you very much for the offer. However, we find the rate below our minimum acceptable term. This is our minimum acceptable terms. We don't like the risk, we have to decline. Okay, this is from A to Z underwriting systems. SAMA. Everyone here knows what SAMA did since 2016 in the market. Thank you, SAMA. Thank you very much. You encouraged people. You are encouraging multinational reinsurers to be aggressive in the market. We started, okay, now in the past it was deductibles in a plastic plant was 2,500 Saudi riyals. What's this? It's a joke. Believe me, it's a joke. It's a big joke. Now we know that the minimum deductibles, million Saudi riyals. Fair? Yes, it's fair. Absolutely fair. The client, the owner, has to be responsible as well. Imagine yourself, you're insuring your car and you have no deductibles. Zero. Oh, Muhammad, someone, okay, when I wake up. Muhammad, your factory has been, it's total, okay, no problem, the insurance company. But now I'm responsible. Now I'm investing in risk management. Thank you very much. This is a fantastic step. This is really a fantastic step. I don't want to go through these details. Everyone knows what the regulations of SAMA, so you can go through it.
But we need to know one thing, Mohammed, that just based on your experience, that what are the impacts that these SAMA guidelines that changed in your loss experience?
Did you read this slide, Kalash? Go through it. This is the answer. This is the answer. Insured is now, in the insured, the client is more focused. He wants to invest in risk management. I don't want to have losses every day. I don't want to lose my market reputation. I don't want, as a client, I don't want to lose my market share. I want to invest in risk management to protect my assets. Okay, we as reinsurers were encouraged, more encouraged. 5 years ago, this hotel is okay, but this hotel, it's 300 million total sum insured. Rate is 0.4 per mil. It's producing 120,000 Saudi riyals. They have, in average, they have like 5 losses, small losses a year. We are paying out of the 60,000 Saudi riyals, we are paying 30. We are paying commissions. We are making, it doesn't work. Today, same hotel, same total sum insured, even less rate, 90 instead of 120, because the rate, okay, it's fair. You are increasing deductibles, the rate has to come down. Rate has to be reduced. Fair, we are fair. However, minimum deductibles is 500,000 Saudi riyals. How many losses happen every year? Above that, nothing. Okay, so as a reinsurer, I would think, okay, it's more safe. I'm more comfortable writing. I will put 50% line. I'll deploy my maximum capacity here. Okay, so reinsurers more encouraged to write business in the region. This following, believe me, ask any other reinsurer, following the implementation of the updated deductibles, late 2016, following that, our market share in Saudi was 20-something%. Today it's 42%. Our portfolio, we are writing in Saudi 42% of our portfolio. Okay, more reinsurers starting the market, Saudi. This is what I'm telling you. Less claims, of course, less claims submitted. Go back to your slide that you discussed. You'll find that total number of claims submitted on property is less. And accordingly, 1, 2, 3, 4, 5, 6 things, 6 effects in my opinion. And accordingly, the sad news, competitive price. But it's fair. What we used to see at 0.5 per mil 5 years ago, today we are insuring it at 0.3 per mil, 0.35, 0.4. But this is fair. We are more comfortable. Examples of undesirable risks, warehousing and ACP. I will go through this in brief. Why warehouses? Warehouses, why warehouses? Warehouses are, as you see, construction. Usually we don't invest too much in construction. Firefighting, sometimes it's available. Sometimes the businessman or whomever has some money. I will put a hangar here. I'll buy this land. I'll put a hangar here. I'll rent it out. I'm making investment. I don't invest in firefighting. Size, massive. We don't have control on what's being stored inside. Means of internal transportation. You see, belt conveyors. It takes the fire that started here. It transfers the fire to last corner in the warehouse. It's belt. It's the fire starts. If it starts on the belt itself due to friction, high temperature, whatever, it's metal, friction, belt, rubber, fire. If it happens in the middle of the belt, it will go somewhere else in no time. Do I have a backup plan? Do I have a backup place? Nature of stock. I remember one fire happened in Dubai back in 2008. It was 88 warehouses in one accident in a warehousing area, and it was mentioned that it's used to store toys. It belongs to one of the famous dealers, toys. And when they investigated, it was airbags, motor airbags, explosives. Okay, internal arrangements, others. This is warehouse. This is a typical warehouse. This is a typical modern warehouse. Sugar mill. Kalish, I'm answering in this example. I'm answering your question about safe distance. Okay, and please unmute. Yep. I want some interaction here. Sugar mill has 300 million flat storage warehouse. They are storing here, left corner, raw sugar. It's 300 meters. It's very safe from our processing plant. That's total sum insured of the processing plant is 600 million Saudi riyals, and the 600 million Saudi riyals still separated by 200 meters to the left, to the right, finished product warehouse. But it's only separated by 40 meters. So 200 million Saudi riyals in the finished product, 300 million Saudi riyals in the raw stock, and 600 million in the processing plant. 300 meters, 40 meters. How, and means of transportation from the raw, the processing is belt conveyor. Processed, taken on another belt conveyor to the finished product stock. How do I calculate my capacity? I have option number 1, 600 million Saudi riyals being the highest value. I have the sum insured of 600 million being the highest value, plus the 200 million, because the 40 meters separation is not considered enough, and I have the full sum insured. Which is the best?
Full sum insured, I believe.
Why?
I believe
Because they are connected by the belt conveyor. There is
Fantastic.
no clear.
That's it. That's it. The belt conveyor acts as a connection. It's not separated. Don't tell me it's separated. Belt conveyor, it happened 2015. RSA paid a lot in this claim. Everyone remembers this claim. It happened that, and it was a sugar mill. It happened that the fire started on the belt conveyor itself and moved to the processing plant. And it was a total loss to the warehouse, and it was partial loss to the processing plant, and it was a massive claim. So why most reinsurers? Guys, we have only 4 slides left, and sorry for taking that time. I know myself, I'm very talkative, but we will have time for questions. So why most reinsurers don't have the appetite to insure large warehouses, large fire load in one undivided compartment, known, outside the country, late arrival of fire brigade, known. Usually it's bulk, it's bunker. Okay, we don't have windows, we don't care about this aeration. Okay, deep rack, difficult to reach. Okay, could be, as I told you, it was reported that it's used to store toys, and when the fire happened, they discovered they were storing airbags. Okay, speedy collapse, the structure is steel, fire. Wrapping material, sometimes it's rubber, sometimes it's heavy plastic. This is adding to the fire load, mostly unattended, yes, true. Attractive theft, maybe, yes. Storage of different kinds of stock in one place when the importer imports aerosols or produced aerosols and toys and whatever. Johnson & Johnson, they have a lot of products in the market. Tissue, blah, 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 all in one place. The fire load in one thing is much, much higher than the other thing, but it's total loss. Sometimes used for other purposes, such as battery charging. Yes, whenever we have something and we don't have place within our plan, take it to the warehouse. ACP is another one. You all heard about the fires happening in ACP. It's almost every couple of months we have a big fire here. When we can consider, do we want to consider? No. Sometimes do we deviate? Yes, deviate and reach our license. Deviate beyond our, no, we don't reach our license when it's critical. But we deviate when we deploy our underwriting sense. Okay, this is a low-rise building, the one to the left. It's a low-rise building. Is it really a problem? Okay, let's evaluate, let's analyze underwriting criteria. Is it close to the fire brigade? They will deal with the fire on the top roof. Is it extensive? It's a low-rise, it's not extensive. Okay, we can deviate, we can write this, but we are not deploying a maximum capacity. Can we consider the one to the right? No, under no condition. This is high-rise, this is ACP, this is the design of ACP doesn't meet NFPA 285, which means it doesn't pass the test. It's not fire resistive, it's not fire retardant, it's highly combustible, highly flammable. Sorry, this is one of the restricted risks we cannot. It answered my comments. Fire extends in 5 minutes, and usually it takes days and days and days. Believe me, one fire here, very famous here in Dubai, it took 3 days to extinguish the fire. 3 days, 72 hours to extinguish the fire.
Mohammed, can I ask you one question as well, that regarding the ACP?
Go ahead, Khaled.
The insulation materials that is using in the ACP. So which one is acceptable to you? And can you consider the risk based on the insulation material used alone, or you must look at the design as well, even if the insulation material used in the building is non-combustible?
Well, I will not give you a diplomatic answer here. Anything before 2018 goes without saying blindly. We'll say it's combustible. Okay, we'll ask for the information, and we know before asking for the information, we know it's combustible. 2018, anything built before 2018, only starting 2018, they started using partially. Some clients started using non-combustible ACP. It's very expensive. The reason they are using ACP, it's easy to install, it's cheap, it's available, it's decorative, but when I use the non-combustible ones, it's expensive. That's why it's limited usage. Okay, this is the feeling. So anything before 2018, insulation material, blindly, it's combustible. We don't consider it unless it's a low rise. And I mentioned why we can consider low rise. You are telling me about, khalas, I mentioned here about the why we don't like it. Sometimes we can consider low rise, pass the NFPA 285, which means the material, the insulation material, is non-combustible, we don't say the percentage, how big is the percentage of ACP. We say what's the design. Is it vertical? Is it coming from ground floor, one strip from ground floor to the top floor? It's one strip, it's 5%, Muhammad, what? Okay, this 5% might be extending on the wall, very close to the kitchen, very close to the gas line. It might cause a big loss. Don't tell me it's 5%. Tell me it's 30%, Muhammad, but it is horizontal. And the separation between that line and the line above, it's for decoration, and the separation is more than 6 meters. So what happens here will never extend to there. Tell me, Muhammad, it's just on the top of the building for decoration. It's not extending, so it's the design, it's not the percentage. Don't tell me it's only 2%, I don't care. Maybe these 2% are more dangerous than 30% when they are well distributed. Okay, insulation material used, I'm telling you, anything, believe me, anything, trust me, anything before 2018 is combustible. We'll ask you, okay, please provide an FPA 285 certificate, which means that the manufacturer of this ACP has passed 285. We don't find this. Not even 1%. I'd say 1 out of 150, 200 risks, they have this. Okay? Okay, Kalash? Shall we move?
Yeah.
Market trends. I leave you, Kalash, to comment on the market trends because I want to smoke.
Okay.
Go ahead, please.
Okay. The market continues to be hard across most lines since 2018. So underwriters asking.
As a broker, do you feel this?
Yeah, definitely. We are feeling this because especially some capacities have gone from the market. So that is also adding to this market hardening. So the prices are going up. So everyone is facing the issues in the market that especially on high hazard occupancies. So on soft occupancies, it is still the same. So it won't affect us badly, but on the high hazard occupancies, the capacities and the prices are changing.
Okay.
And we want to know from your experience as well that how long it will you are expecting this market hardening. So or we already reached the peak of it. So because you have seen a lot of changes in the AFC as well, some market has gone. So we need to know.
Let me tell you that what we saw in the region recently, markets hardening because it's normal. Competitors are less. When you have 2 products in the market, it's different than when you have 10 products in the market from different sources. The competition is high, market is soft. Competition is less, market is hard. How many companies, how many big names left the market within the last 24 months? I can name them. Many. Yeah. Accordingly, the stable ones, it's the time. This is. It's not like we want to increase the price. It's the market experience. It's fair. Market is hard because the competition is less. Because who reinsures us as reinsurers? Who buys where we buy our capacity? We pay a lot for that because even PartnerRe was on the market. Now PartnerRe are reinsuring us, but from Zurich, from Paris. They are charging us too much to protect our capacity, to give us our treaty protection. Now they are charging us too much compared to last year. Although our loss ratio is much less. So fairly we have, it's a market competition, it's the market demand. Less competition, market is hard. More competition, market is soft. Proportional. Okay? Okay. Today, because, as I mentioned, because competition is less, more risks, more good risks are in Allianz, for example. They left, with all the respect to Allianz. They made a decision. We are not continuing in the IFC. Okay. Where is this piece of cake going? RSA, Zurich. Who's left? Who's already left? RSA, Zurich, QBE, IG. Who has capacity to write paper? Okay, out of 10 players, it's RSA, Zurich. Okay, we have to increase the price. Okay, there is a diminished appetite for poor risks. We are not going to accept it anymore. We were not accepting it, but now our appetite is even refusing them at all. Okay. Overall, good history in the region. Go back to slide number 14, Kalish, which you discussed when you discussed. I will not go back now, but when we close this, everyone goes back to slide number 14. See the impact of the updated deductibles on the property losses coming from 56% 2016 to 36% 2018. 20% is not small. 20% is huge. Reduction in number of insurers, we already discussed it. Reduction in the number of reinsurers resulting in this competition. Thank you very much. Now I ask myself, do I want to insure a property that invested 2 million Saudi riyals and they have a very poor management? Do I want to save 2,000 Saudi riyals and go buy the most expensive wallet in the market and have nothing to put inside it? What's the point? You invest, you install, you cannot manage. No, management comes first. For me, management. Then if the management is keen, they will install. If the management installs and they are not keen, we are just feeling the point. We don't care. What about a property with just acceptable firefighting and management willing to improve? I welcome these guys. I stand side to side by them. I give them consultancy. I give them recommendations. I'm always with them. I put some recommendations to a client. I visited the plant. I put some recommendations. I revisited the plant in 6 months and I didn't find any compliance. Can I cancel the policy? I have the full right because I put it in my acceptance contract. If I find no compliance with my recommendations, this policy will be automatically cancelled. Yes, I have the right. This is a kind of management I don't want to deal with. To what extent is loss ratio of a client? We passed through this many times during the presentation. Thank you very much. Any questions?
Thank you, Muhammad. Now, as you mentioned, the floor is open for questions, gentlemen. Anyone who has a question, just you can unmute and ask your question.
Eli?
Yes?
It seems everyone went to bed.
No, we are still here.
Okay, ask me a question.
Thank you very much for the great presentation.
Everything was so clear. Thank you, Muhammad.
Thank you so much, Mr. Muhammad.
I'm all yours, sir. I'm all yours.
شكرا جزيلا يا أستاذ محمد.
أهلا وسهلا.
Everything is so clear.
Muhammad, I would like to ask you a question. How do you see the risk of cloud seeding nowadays?
What do you want to consider this? Is it
As an underwriter, how are you taking it into consideration?
It's still too early to make because the losses coming from the cloud seeding only appeared last Jan, 3 months ago. It's being discussed in London, by the way, and it's not insured. By all means, it's not insured. It doesn't come under NatCat. It's something that's not. It's a man-made risk. It doesn't come under NatCat. And in London, they are still. I mentioned we are a branch of London. What happens in London happens for us. It's still being discussed. I think next year, next policies, they will start putting limits. We'll start seeing cloud seeding as a limit on each policy. But still, so far, we haven't received any claims due to that. We received claims. We are investigating the claims. Cloud seeding, it's not mentioned clearly, it's cloud seeding. We are investigating. Okay, this happened due to cloud seeding. At least we have a point to argue about. But anyways, it's like Corona.
Yeah.
Too early to make a judgment on this. But it's being discussed, it's being a concern. We started discussing it with our London office. Guys, listen, this is happening. This is due to cloud seeding. This is not NatCat. We need to find the reason. We need to find something legal. We don't want to deviate from our responsibilities. We don't want to say, no, this is not covered. We don't want to go to courts, but we need to find a legal frame to include this.
Okay, thank you.
No worries, no worries.
Hello, Muhammad.
Yes.
Hello, Muhammad. Yes. May I ask one question?
Go ahead, please.
What is the minimum distance between consider as a separate risk?
Okay. Minimum distance. Is it? We have in RSA as a reinsurer. It's different from AIG. It's different from our competitors. It's different for you. It depends on which school are you following. For us, if it's a manufacturing risk, it depends on, is it plastics? What's the possibility of fire transfer between one building to another? Is it high rise? Is it one floor? Is it ACP? Is it reinforced concrete? It's a matrix. It's a big matrix. One, reinforced concrete. Two floors. Next risk is one floor. It comes up with a distance. In general, this is in full details. In general, 30 meters is enough for single-story buildings. When it's a multi-story, add to each story 5 meters, just to be on the safe side. So, okay, does this apply for residential buildings? Of course not. Residential buildings we consider high-rise, we consider 50 meters, low-rise we consider 25 meters. So in general, when we make an average, it's 30 meters. However, in case we have two buildings, two high-rise buildings, together sharing the same podium, is it two separate risks? No. Do we consider the sugar example a separate risk? No, they are connected on the belt conveyor. So complete separation by 30 meters, single story, is safe.
Okay, Muhammad. Thank you very much.
No worries.
Ladies and gentlemen, any other questions?
Thank you. Yes, Ili, I have one quick question for Mr. Muhammad relating to voluntary discount. Some people have been discussing this as it happened in motor insurance, that some of the businesses are not operating for the last couple of months or so. Would they be willing to give this or extension free of charge? Has this been discussed or no?
Extension free of charge when we are talking about a hard market? I don't think so. Okay, we have been receiving recently since beginning of mid-March, we have been receiving extensions requests. We appreciate, we give it. But free of charge, I don't think we will give it in a hard market, free of charge extension. For what reason? Okay, free of charge, I don't think so. On a discount, okay. But why we give a discount? We are still protecting your property. On the other hand, you can reduce your BI sum insured because you are not producing. You are almost silent. You are not producing in 2020. April 2020, your budget is not the same as April 2018 and 19. Your total sum insured, BI sum insured was 200 million Saudi riyals. Today, it's 100 million. You will reduce your BI sum insured, make me more comfortable. When it comes for renewal, I'll give you discount. Because the most dangerous part, BI, the most thing that I don't like, BI, is reduced. I'll give you a discount. It goes without saying. It's not that I'm doing you a favor. It's the pricing system. BI is 10% of the total sum insured, or 20, or 50, or more.
All right, thank you very much.
No worries.
Hi, Mohammed and Kalesh. Congratulations on a fantastic presentation.
Thank you very much.
This is PV from Sapta Coffee Company. I would like to ask your opinion, your comments, especially on the pricing during the post-COVID scenario, especially when there will be a huge pressure on the commercial clients on their budget.
Did you expect the COVID? Did you expect that we are doing this presentation now at home?
Certainly not, Mohammed.
We can, believe me, it's too early to discuss about anything related to COVID. Do you know when are we going back to business? If we go back to business next week or in 2 weeks' time, or in 1 month's time, I promise you everything will remain the same. But if it's taking more time, I think we are all in trouble. I think we never know. I don't know. I personally don't know. I was under impression that end of May, I'm traveling to see my parents again. I'm going back to my office again. I'm taking my kids out again. I'm going to have to enjoy my. This is what I expected. Beginning only 10 days ago, but we never know. Every day the cases are higher. Every day the precautions are more. I don't know. Every day new things come. So it's too early to make a judgment. I don't want to promise you something that I'm not sure of. But anyways, again, catastrophes. This is a catastrophe. Catastrophes always, historically, always. Market improvement comes after a catastrophe.
Thank you very much, Mohammed.
No worries.
Hi,
Thank
Mohammed.
you. Sorry.
Yeah, go ahead.
Sorry, this is Abdul Munam. Thank you, Mr. Mohammed, for the presentation and all the gentlemen who work on this training. I have maybe layman question for all. What is the practice now? What is the acceptable from the reinsurers regarding the surveyors reports from risks? The client is in an area restricted. The surveyor is having difficulty to do his survey. And is there any solutions now in the market?
We are very, and you can ask the brokers, and you can, if you are dealing directly with us, any of the cedants dealing directly with us, brokers, they will see that we are really very flexible in that. We don't accept risks without information at all, but we accept reduced information. We can accept, for example, in the past, we never accepted a risk that you have a sheet filled by the client. We don't have 40 floors, RCC construction, fully sprinkler. We need a proper survey report. These days, we appreciate what's happening. We don't want to lose our clients. We don't want to lose our market share. We appreciate that we'll have some more claims behind this, but we are flexible. Okay, give us the minimum level of information. Of course, I will not rely on minimum level of information when it comes to steel mill, integrated steel mill, that electric arc furnace, continuous casting machines, direct reduced unit, direct reduced iron unit. Of course, I will not rely on minimum information, but instead, alternatively, I'll tell you, okay, give me an old survey report. At least I have something in my file. At least I have an idea. Okay, give me the least you have. 5 years ago, 2 months ago, I'd never accept a 5 years old survey report. Today, I will accept it just to facilitate your job and my job. That I don't want to lose market. I don't want to lose money. And I don't want to put my clients in trouble. So I'm flexible. We are all flexible. Multinational reinsurers in the region, I can see they are all flexible in this. Either they send their surveyors, their own surveyors, okay, we will handle, don't worry about it. So either they send, when I put a subjectivity of 3 months survey report to be furnished within 3 months, updated survey reports, some insurance companies in the region come back and say, Mama, can you make it 6 months? Approved on the spot. But as long as we will have something, 6 months, and we are ready to, but on what? On telecommunication, maybe, yes, telecommunication, the assets don't change too much. On hotels, yes, this is a hotel, it's operating, and during this time, nothing will happen. Okay, during this time, I mean, no assets will be added. Okay, we can accept extending it. In schools, yes, they are closed, they are safe, we can accept. In steel mills, are they operating? They are operating as normal, as normal. Can we accept them without any information? No. But we have, Mohammed, we have 2015 survey report. Oh, this is outdated. This is very old, but we will accept it. We are flexible. We are being very flexible.
Many thanks, Mohammed.
Muhammad, I have a question, please.
Go ahead.
Yeah. Are you taking in consideration EML or PML in your calculation? And what's the best practice in your view, please?
Okay, we are working on EML. First, we are working on EML block. What's the EML block? It's the maximum value, the highest value within one block. In the sugar mill example, our EML block is the total sum insured because they are all connected. This is our EML block. What if we have a warehouse in the total sum insured, but it's outside, it's somewhere else, it's at 100 kilometers from that plant? Okay, we will exclude this from our EML block. So our EM block is the highest value within one block, the highest value that's exposed in one accident, one border, one frame. Okay, what's the EML out of the EML block? Okay, is it gonna be total loss? Is it gonna be based on what? Do you have automatic firefighting? Do you have manual firefighting? If you have automatic firefighting, we will consider this in EML. And as I mentioned, I have risk management authority. So I'm able to calculate EML. So we work on EML block, answering your question so as not to go into more details in this because it takes days. EML block, including BI, evaluation, cement, automatically give the maximum BI, give the maximum indemnity period, because the least time to repair in cement, especially when there is a machinery breakdown extension, 24 months. Sometimes it's less, but most of the cases we see 24 months. Give the maximum BI, give cement physical damage 30, 40, 50%, depends on the separation, depends on the factors, depends on firefighting available. So we work on EML block to calculate the maximum capacity, maximum value. Then we start amending this, reducing this to EML based on the firefighting, based on the circumstances, based on the industry, based on a lot of things.
Thanks a lot.
No worries, no worries.
Other questions?
Okay, Eli, we can share some. I can share some questions that is shared via chats.
Yeah, please.
Okay, Mohammed, I got like around 4 or 5 questions on the chat, so I'll be sharing that with you. That
okay.
The first question that it's about RSA stands on standalone warehouses. So which is asking that a well protected and constructed warehouse, but which is standalone. So what is RSA stand on that? So RSA can write it or.
Okay, normally if we're seeing warehouse, I mentioned about it. I mentioned why we don't like warehouses. But is it a straightforward, is it a clear, straightforward decline? Is it a tobacco, straight, clear, forward decline? No, it's not. We go, but we are very strict. We can, but we are very, very, very strict. We need to know, we put many subjectivities on warehouses. But finally, the answer is yes, we can. But if we see 100 warehouses, standalone warehouses, we'll accept one.
Okay. Let me move on to the next question. That what is the concern with reclaimed land as a property underwriter?
Reclaimed land depends on the technology used. Reclaimed land because in the past reclaimed land was done manual. Today it's machines. The impaction factor, it depends on the earthquake zone. Earthquake, when it happens on land, normal land, it's rock, it's connected. Reclaimed, it's not. You never know. Earthquake and reclaimed land, it's like putting like this bottle on the table. Okay, when the earthquake, the first thing that will move is the bottle. So it's the same as reclaimed land. It's not that it's connected to the land everywhere. It has limits. It has depth. It's like a mobile thing in the middle of the sea. Reclaimed means it's in the middle of the sea in the water. Okay, it's reclaimed. At the end of the day, it's not 100% stable. It's not. Expect many subsidence issues. Expect many movement issues. So reclaimed land, when it happens in a low NatCat zone, we can accept. We deploy capacity. In a high NatCat zone, no.
Okay, the next question: what is the percentage of stock sum insured in a property that you need to consider it as a storage?
Above, okay. Ideally, above 35%. When we apply our maximum deviation, our maximum authority to deviate, we go to up to 50%.
Okay. And one question which comes now, that what makes you a pepper king when other reinsurers are struggling in the region?
It's one day, by the way, one day we were struggling. It's the experience, it's the stability of the company, it's the assets of the company. One day, 2014, 15, we were struggling when everyone else was stable. Today, we are the most stable when everyone else is struggling. So it's the financial position in the market, the strength of the underwriters in the region, the support we are getting from London, our results, our experience, our results, believe it or not, our combined ratio 2019 was less than 70%, which is phenomenal. Okay, our property combined ratio is less than 50%. We made 16 million pounds, British pounds, premium, out of which 8 million pounds pure profit, around $10 million pure profit to the company. We got very good bonus, by the way.
Okay, then the next question, that if insured has clear loss record for past few years and then suffered a series of large losses in the current year, how the policy will be assessed in the following year, assuming all affected obsolete property or machineries are replaced?
We will need to assess this. Of course, there is an increased claim. Imagine yourself insuring your car and you had a couple of losses, a couple of accidents, 10 years clean, and suddenly you got, it's unlucky year, you got 2 accidents. Will the insurance company give you a discount? Will it be flat? Will they consider the 10 years? Of course, there is a stop. We need to stop. What happened? Why? Which precautions you took following the losses? There will be a review. There will be negotiations. There will be new assessment. We will review the rate.
Okay, and the last question, that how a building transition from construction insurance into property insurance, how is a provisional handing over certificate is different from a final handover certificate?
This is one area, one concern we have here. You remember, Kalish, we worked together early April in one risk in Mecca, where it's, yes. I told you, Kalish, this is still under construction. You said, no, Mohammed, it's 11 buildings, 7 are handed over completely. Okay, Kalish, but still contractors are on site. They might affect this. So it's negotiable. We need to see certificates for the handed over buildings. We need to put the fair rate because, okay, we're insuring handed over properties, but we don't want to forget that contractors are still working. Okay, it's additional risk, additional hazard. Okay, there should be some additional premium, and we managed to get this. It's fair for everyone. The client is insuring his property, is making sure his property, his running property is covered, he's covered. We are making sure that we are charging the right premium because the risk, the hazard has been increased by the presence of many contractors. So handover certificate for specific buildings is acceptable. We will not, if we decline this, someone else will accept it. If we decline this and no one else is going to accept it, it's unacceptable risk to everyone. If we decline this because we are not very sure and someone else will accept it, we are losing one good chance, good opportunity. We are losing the competition. We are losing a good risk. We don't want it. Okay, so we will consider the initial certificate as long as it's issued. We will consider charging the good premium. The fair premium. We will consider some precautions. Precautions, the best one is putting a limit on any loss caused by a contractor on site. We will not give the cover, 100% cover, PAR cover, without putting a limit for contractors. Usually it's 10, 15, 20 million Saudi riyals if contractors are still there. It's an extension. Any loss caused to a property, to an existing property, caused due to the presence of contractor, it should be sublimited. We will not keep it open.
Okay, one more question. That do you have comments on the quality of risk engineering survey reports which are written by insurers in the kingdom?
Yes. Yes, to some extent, yes. Much training needed. It's becoming like 10 years ago. It was 5 surveyors giving very good reports, 5 reputed. It's again competition. When there is a competition in the market, when competition is too much in the market, quality is less. Now it's anyone who wants to invest, who wants to start a new business, studied risk management somewhere, studied engineering, yalla, I'm opening a risk management firm. Sometimes we don't get, sometimes we go back to the insurance company or to the broker. We have full survey report, but still it's not covering a lot of things. We go back with questions. As long as we are going back with questions, although we have the survey report, it means that we have concerns. Yes, answering your question is yes. Risk survey report are still needs training, but at least there is progress. We have seen progress. 10 years ago, nobody knew about risk management. 15 years ago, nobody knew about risk management. Okay, 10 years ago, I was with Chubb. 15 years ago, I was with Chubb, 2005. I was traveling from Egypt to Saudi to survey one risk and go back to Egypt. Costly, time. Now we have someone in Saudi, sitting in Saudi, doing this. Third-party firm, third-party, okay, needs training. The more questions the reinsurer, the multinational reinsurer goes back to the broker will go back to the insurance company will go back to the surveyor, he will take notes. Next time when I go to survey this, I need to consider this and this and this. So it's improving. Yes, it's improving. It's important. It's improving. We see improvement, but still we have concerns. Little.
Okay, the next one, that do you see manuscript wording request from the kingdom, or it is only LM7 wording?
Mostly 90% of the cases LM7.
Okay, these are all the questions, and I think the remainings which we already covered in other questions, I think, and we already answered.
Okay.
Okay, so gentlemen, in the absence of any other questions, we'll call it off for tonight. Thank you a lot, Muhammad, for
Thank
your
you
time.
for
Highly appreciated. And we went like 30, 40 minutes beyond the time as well. Thank you, Kalish, as well for your time. Thank you, everyone, for joining. And we hope to see you in future trainings. As I mentioned, we have a training as well coming on Monday regarding D&O, PI, and CGL. So we hope to see you again soon, and Ramadan Kareem again. Muhammad, any last words you would like to say?
Yeah, you mentioned during discussing this, you mentioned that you are giving away some Rolex watches, some Omega watches. Is it true?
Yeah, we'll consider it for sure. we should have.
Thank
put
you,
the
everyone.
gifts
Thank you
the
for attending
questions.
this.
It is virtual, by the way. It is virtual, Muhammad. You will receive a picture.
I hope I wasn't too much boring. Thank you. I hope you enjoyed it. I hope you got some information. I'd ask Eli to share to those who don't have my email address, my contact details. Eli, please feel free to share my contact details, my email address. Anyone who has questions, anyone who has any comments, please feel free. Come back to me. I'll make sure to answer your questions. Thank you, Eli, for giving me this opportunity. Thank you, Dia. Thank you, everyone. Kalish, especially Kalish.
It's our pleasure.
Thank you.
Thank you, Kalish.